And please, because the venue is relatively big, so please keep quiet during the session. And if you have to talk, feel free to go to the other places like cafes nearby, etc. But the event is gonna be quite exciting. So happy to have you today. Yeah. Great. Feel free to sit in the front. All right, I think we have almost a full house today. Thank you everyone for making it to Shard Dubai. This is Belinda Zhou. I'm the founding partner of Sharding Capital. Shard Dubai is supposedly the largest and the first native demo day in the MENA region. So we Sharding Capital make it a flagship event for ours because in this region, a lot of events are relatively commercial. Build a series of events that's truly for builders and for them to really present and connect with a lot of helpful local resources, especially when MENA crypto narrative is getting stronger and stronger, and Dubai has become where Web3 people hang out. So just some simple background. I myself started crypto in 2017. Back then I was also in Dubai. So I was a trainee for Sheikh Mohammed, ruler of Dubai. So I've been working with the Dubai government a lot. And then I got into crypto the same years, and I have been doing crypto investment ever since. So today we are very blessed to have our co-hosts, including DIFC Innovation Hub, who help us with lovely venue. And then we have on-chain events, DMCC Crypto Center, Mimo, Kuma, and Dubai Blockchain Center to help us with all the possible resources that we need. So just some simple background, because we think crypto is at its very nascency. So we look at a lot of verticals, and we talk with a lot of quality VCs. So we really want to find a chance for a lot of quality projects to showcase what they have in front of good audiences. So basically, Shard Dubai is supposedly the first and largest native demo day here in the region, because we do both on-site and online. And we have done like the first online session, and it has received very positive feedback. A lot of project presented on our online demo day has received a lot of interest from other VCs as well. So we will do it a lot more like in the upcoming months, and so twice per year. And it's really to showcase the project that we have, good project we have come across during our research journey. So we look at a lot of verticals. Basically, we're vertical agnostic. So we look at, for example, DeFi, NFTFi, real world assets, social fi, LSD, AI, GameFi, among many other verticals. And so for Sharding Capital, because we are a relatively new fund in the region, but because basically this region has presented enormous opportunities, and we see a lot of people are kind of a bit, every time when they come to Middle East, they're a bit lost in terms of what they can do here, because it can be a blind box from the outside. So here we position Sharding as the go-to fund in the MENA region, and we basically open doors for our portfolio project, because when projects think about global expansion, MENA is definitely a very, very important stop. And we usually work with a lot of government regulators and VCs from the region, also like internationally, and a lot of basically to give them a very good platform to present. So maybe even one day Shard Dubai will be a lot bigger than Sharding Capital. And it's a like a free event for a lot of projects. So we just want to present this opportunity for quality project so that they can have a lot of good exposure here in the region. And this is also to position Dubai as a crypto center and also a crypto hub. Some very exciting things that we'll do onwards. So just as an alpha. So we're actually talking with the Dubai government to do a 10K golden visa program. So this golden visa program actually allows it will be in the form of an NFT, and this will allow the NFT holders to get golden visa access, which means it will also have a lot of benefits, including say faster banking access, and also like the community resources and a lot of exclusive events. Quality people to come to Dubai and basically do a lot of exciting things here in the region. So thank you. Thank you so much. So just to quickly run through the agenda for today. So we'll have the panel, which is bull narratives, and we will have our very lovely guests later to talk about what they think are very exciting at the moment. So there's a lot of alpha here. Feel free to share. Actually, we have a Zoom link. So feel free to share the Zoom link with your friends who cannot make it on site. And then we'll have the demo sessions. So we'll have 10 projects presenting, 5 projects in the morning and 5 projects in the afternoon after our lunch. And then we'll have 2 fireside chats and then a last panel about crypto regulations. So the first panel will have Sammy from Redacted Cardo, and then I have me and have Ronnie from Hack VC, and I have Vinit from Vyper Capital and Julia from New Tribe Capital. And then during the demo day, we'll have our lovely VC judge. So we'll have Kalan, and then we'll have Zhou, Jake, also Juliet, Ivan, Alexander, Never Snow. And these are the project that are presenting today. So we have ZKX, we have Kuma, we have Vyper Protocol, we have Plasma, we have Phaver, we have OrbofiAI, we have Fuji Finance, Timeswap, Wakalah, Furion. And then in the afternoon, we have 2 lovely fireside chats. We have our guest Lundard with AJ to talk about NFTFi. And it's a quite interesting topic. And then we have Zhou talking with Claude about real world asset, which is a very exciting vertical we're looking into at the moment. And then afterwards, we'll have the panel talking about regulations. We have lawyers from Klimada, we have Nasha from Seba Bank, the regional bank, and we'll have Rishabh from TDFi. So that'll be the rough rundown for today. And I think without further ado, we can go into the bull narratives. So let's have Sammy, Ronnie, Vinit, Juliet on the stage. And okay. All right. Okay, Vinit, drop one. Sure. Thank you. Then me. All right. They need to open it. Can you guys talk? Wait, I forgot to ask. Oh,
Hello?
Yeah, you need to switch it on.
awesome, it's working. Okay, so great. We have our panelists on the table. It's gonna be very alpha heavy, so get prepared. And before that, let's have our panelists to introduce themselves one by one. How they're doing at the moment, and also feel free to talk about your VC as well. Yeah, maybe we'll go with Ronnie.
Yeah, sure. Hey, everybody. I'm Rodney. I'm a partner at Hack VC. I started off as an angel investor in crypto in 2017, similar to a bunch of other people who got into the space around the same time. We started at Hack VC about 2 years ago. We mostly focus on seed stage DeFi protocols and infrastructure as well.
Hello, everyone. My name is Juliet. I'm a partner of New Tribe Capital. So my journey in crypto was quite strange because I've got into crypto in China, as some of people might know, already in 2017. Because before I've got quite a boring job in some big Chinese corporates as a C-level manager. And from 2017, I went to China, attending some crypto conferences, meeting people, learning about crypto in Chinese, and then pandemic stuck. And after pandemic, I moved to Dubai and we started the New Tribe Capital. So that's basically how it started.
Awesome. Sammy. Yeah, maybe a bit louder. So, and you guys can put your mic closer to your mouth.
Hi guys, Sam. I think it's not on.
It's not working.
You need to press the button upstairs. Yeah, on the top. Is this better? Yeah, there we go.
Great.
Yeah, hi guys, my name is Sammy. Like these guys, I've been in the space since 2017, 2018. I'm not a VC, but I'm building with Redacted and one of the co-founders there. We're basically building on-chain liquidity tooling for different DAOs and protocols to, find new innovative ways to help build the liquidity on-chain.
Awesome.
Guys, good morning. This is Vineet here. I'm the CEO of Vyper Capital. We invest in crypto blockchain projects. We've been investing in the blockchain projects for the last 3-4 years, over 200 plus investments. One of the few only investors in Sui blockchain in the region. Some of our other investments include Casper Labs, Web3 Auth. These are the ones which everyone knows about. Crypto journey, I've always been a gambler, gone to a lot of casinos, landed up in crypto, having fun all around. Cheers, guys.
Awesome. Awesome. Also feel free to make the mic closer to your mouth so we can hear better. Great. So I guess I would just go to the point straight away. We're quite interested, like what would you think would be the bull narrative in the upcoming 1 to 2 months? Because like, for example, NFT is very, very trendy for like 2021. And that was basically a breakout point for NFT at that time. So do you see something that's similar impact in the upcoming 1 to 2 years, the narratives or some verticals that you are looking into? So maybe we can start with Ronnie.
Yeah, sure. So for like the next 1 to 2 months, I would think that like one of the most exciting things probably within this period of time would be like decentralized stablecoins, but like fully decentralized stablecoins that are not backed by USDC. I think that we've seen a lot of volatility within banking rails within the United States, and stablecoins that rely on banking rails in the US in order to maintain their redeemability have impacted a lot of stablecoins within DeFi that initially started off as decentralized projects and then trusted the US banking system a lot to basically like maintain their peg via like USDC redemptions. Like a lot of those projects had the same DPEG that USDC had. We saw it with DAI and we saw it with Frax and a lot of other stablecoins too, in a way. And so, yeah, I think that the thing I'd be most excited about probably around like the next couple of months would be like decentralized stablecoins. Apart from that, some narratives I really like are L1s with unique consensus mechanisms that incentivize different things. I think a lot of L1s try to mimic the incentive structures of Ethereum, trying to set the gravity of the network to be the same. But yeah, I'd be really excited to see some innovations within that category as well.
Awesome. So decentralized stablecoins, I guess that's very much needed with all the DPEG happening, and that's destructing a lot of people's confidence at the moment. Yeah. Juliet?
Yeah, first of all, I think that NFT narratives are still here. So but before it was like mostly like a JPEG pictures. Right now, there is a new wave of NFT boom. First of all, of course, like there is some like, let's say people buy NFT to belong to some special club. So that's number one. Secondly, we can see the real mass adoption for the NFTs and the perfect use case like Tiffany & Co., which made the collection with Spanx. So, and it was sold out immediately, like Starbucks NFTs as a loyalty in the partnership with Polygon. So that's like, the perfect match of the NFTs to their like, to real businesses. So then we have another narratives for NFTs, which is basically like real world assets NFTs, asset-backed NFTs, fractionalized NFTs, and I believe it will be discussed later afterwards. But like there, I see like a big amount of projects from the real estate space, like, you know, fractionalizing gold, diamond, whatever, and they do it in a form of NFTs, apparently because the regulation is not there, so it's the only option they can do it. So NFTs is still a narrative. So another narrative is, of course, AI, and especially after the boom from ChatGPT 3, ChatGPT 4 right now, and everyone is trying to build another AI-based project. But interestingly, the major thing is like, do we need blockchain to be matched with AI technology, or it can go separately? But of course, some people are speculating on that narrative, and it's going to boom for the next 2-3 months. So going further, and my favorite narrative is still like what everyone is talking about is the infrastructure. So, and infrastructure is still quite a broad term. So that's why I would love to specify what like we are looking for is a middleware solutions. So middleware solutions in terms of the bridging the gap between Web 2 and Web 3. So that is how it should go. So we need to connect, because there are lots of people like who are saying, yeah, we invest in an application layer and we need to build more Web 3 for applications. Do we need so? Because there are so many Web 2 implications. And the only thing you need to do is to provide this SaaS to bridge it to the Web 3. So, and it can work perfectly. Another thing is decentralized socials and DUID. So I believe it's still, we need more time than 2-3 months to get it here and to onboard more users. DID, I don't know, some people are bullish on that. I'm still considering, but it's definitely the new narrative.
So it's a combination, basically NFT, very bullish, AI plus blockchain, very bullish, and middleware. Awesome. Thanks, Juliet.
Yeah, on my end, I think I don't think we're gonna get a bull market in 1 to 2 months, unfortunately, no matter what we do.
A
but,
week, you mean years, 1 to 2 years.
Oh, you said years.
Yeah,
Okay,
yeah.
I thought
Sorry.
you said months. I thought you said months.
Yeah, 1 to 2 years.
On my end, I think the two things I'm focusing the most on, which I think have the most potential, I agree, is decentralized stablecoins. I think that has a really big need just for where the Ethereum and its layer 2s are at right now. But another ecosystem I'm really excited about and also been spending a lot of time on is the Cosmos ecosystem. I think it's hard to imagine where like a layer 1 blockchain, which was you know, a really big part of the last cycle, lots of new layer 1s popping up. It's hard to see where there's like a boom in layer 1s in the next cycle, considering the progress that like layer 2s are making. But one exclusion, I think, to that is the Cosmos ecosystem. And one reason I'm spending a lot of time there is because I've been looking really into IBC, into blockchain communication, ICS, interchain security, and some of the developments they've been making there was helping out with the Bearchain guys and some of the developments they made on the their new EVM framework, Polaris, which solves a lot of the problems with Ethermint. And I think from an Ethereum perspective, I think we need to really improve on decentralizations and stablecoins and stuff like that. Whereas I think on the Cosmos side, if we keep on building the infrastructure for app chains to exist with specific purposes, I think that can also be like a really good catalyst to get people excited again, right? Because I think layer 2s are just face their own set of problems with decentralizations around sequencers, getting to market, talking to each other, communicating with each other, where I think like Cosmos really excels in that front. So yeah, I think Cosmos and decentralized stablecoins are the two things I'm most excited about.
Awesome. Awesome.
So normally as a investor, when we invest, we don't look at segments, but more as founders and what the idea is, but still keeping an eye. I think NFT has been really a strong narrative still. In the last 1 week, 3 of our NFT investments have raised over $10 million. from people like Pantera. So NFT3, Few and Far, and Bitscrunch. Bitscrunch is valued at $100 million now. These all have happened in the last 1 week or 10 days. So NFT definitely is there. Then there's these specific layer ones which are coming up, like Sui has a narrative as well. People have been talking about Sui and Aptos and people who are building on that. So I would look at that as well. Personally, I'm a fan of DeFi. I think when we talk about use case, what bigger use case than lending and borrowing? Stable coins also attached to it. Going to Zimbabwe, why do I need to use US dollar? Why not a stable coin USDT or something like that? So I think these four will be definitely areas that I think will be good. Now, when we talk about hype, yes, there will be things, in the end, bull market has all about hypes. You have tokens which just fly because people like them. Metaverse has that play, and launchpads will definitely have a key say in those segments. For us, we still spread out. We look at teams that can make magic happen and invest based on that.
Awesome. Great. I think I basically look at a lot of verticals, and those that I find most interesting and also where I make most money are the project that I think generate a lot of yields. So I think because a lot of crypto projects are just trying to build, and then they don't really think about product market fit. And then if they don't do a lot of effective user acquisition strategy, then not a lot of people interact with their protocol. So the key for a token price to do well is that the protocol itself need to accrue value, like the token need to have some sort of utilities. So for example, when we look at project to invest, we look at how potentially their protocol can generate revenue. A simple example can be GMX. I guess everyone knows GMX. It's basically recognizing itself as a casino, but we make money. It's like exchange, right? Exchange is the most profitable business in crypto at the moment. And basically GMX is an online casino, but they share revenue with their token holders. So similar protocols like Gains Network on Polygon are also doing the same. So it's very important for project itself to generate revenue. It's similar, like it's actually more become like Web2. You as a company need to generate good cash flow, and then your holders will be confident to hold your stocks. So in the onwards, you will get also more buyers to analyze your fundamentals. With these fundamentals, it's easier to have a good fundamentals. So real yield is one thing. It's very important to look at how a project find their product market fit and also generate revenue. And then another area we look at is if this app it is a consumer facing application that can get a lot of traffic or get a lot of users. Because when you get a lot of people using your protocol, naturally you have a lot of users, and at a certain stage you get to monetize. It's like previously we use DocSend, it's free, but afterwards when everyone get used to it, you need to pay to use DocSend. It's how some protocols like Biconomy, Galaxy, they have been like acquiring a lot of users via their free integration, focus on building the ecosystem. But once they have acquired a lot of users, first of all, it's easy to get listed on tier 1 exchange, and second of all, they get to collaborate with a lot of big parties to acquire more potential revenue stream. So I think these two areas are the ones that standing most ground in crypto at the moment. Easier to get the retail investors convinced, excited. Also easier to get the bigger players like the exchange, or also even bigger institutions to understand how they function and how the future is gonna be like. Yeah. So I guess if you guys are interested in more bull narratives, we can later ask our panelists in the Q&A session. But in the next session, I would love to ask our panelists, since you guys look at a lot of projects, what are the areas that you think are definitely NGMI, like not gonna make it in the upcoming 1 to 2 months, and due to what kind of restrictions, right? So we'll have, I guess, Vineet, and please, everyone in the background, or just try to keep quiet, or remind people next to you to keep quiet. Thank you so much. We'll have Vineet. Please share what kind of project or what kind of verticals you think that are not gonna make it in the next couple of
in
months.
crypto, saying which one is not going to make is risky, because suddenly some
Yes, that's why we need to ask this
1,000
question in this panel.
Okay, so when I look at markets, and then I use the rainbow chart to invest, I think meme coins would not make it in the next 1-2 months.
No, 1-2 years. 1-2 years.
Even 1-2 years. It's meme coins are used to drain out liquidity. So 2025
Yeah.
November, you'll see meme coins going back on to crash the market. So definitely something that you should keep away with. You should go more towards value investing rather than pump investing. In the next 1-2 years, which ones are the dodgy ones to keep away? I think, overall, it cannot be a segment. It's more about, you really need to understand what the team is trying to do. If the team is here for a quick buck, may raise some funds and plant some trees in Africa, you really need to keep away from them. But any project that is building something that actually uses blockchain is where you should be. So, showcasing something very specific is a very risky bet here.
And so you say meme coins are not gonna make it.
2025,
Elon Musk
put all your
didn't
money
like
there.
that. Cool. Thanks, Vineet. Maybe Sammy?
Yeah, I think one thing that like a lot of people are excited about right now, which I am really not excited about, is RWAs, or the real world assets.
RWA.
Yeah. I think there's definitely a fit for them in crypto and blockchain as a whole, but I think definitely being in the trenches, I guess you could say, the every chain out there, even Ethereum mainnet, does not have the infrastructure in place right now to support it. And I think back in 2018, people were really excited about security tokens, and this is RWAs are security tokens too. And obviously they didn't work out because even for a project that lives entirely on chain, right? Their business is on chain, the treasury is on chain, everything is on chain. Even they don't have, the tools available then to succeed. So now I think there's a lot of interest in bringing in real world assets where a lot of that infrastructure lives off chain. So before we've even solved the protocols living in Ethereum and Cosmos and around it, we're trying to build bridges of a broken system to something that's a lot more organized. And I think we should spend a lot more time on infrastructure. And I don't think RWAs are NGMI. I think RWAs are GMI. But I think it's too early, and I don't think we're there in 1 to 2 years. I think it's way further down the line.
So it's quite interesting because back in 2017, I was helping out a real world asset project in Dubai. They actually raised 30 mil, and I think Don Tasport was also on the advisory board. But they don't, I think afterwards, like the founder was very frustrated and then shut down the project and refunded all the investors simply because back then the infrastructure wasn't there. But I've been talking with him recently, and I think it has been several years, and I think the actual way for crypto to get liquidity and a very important way is through RWA. Because if you look at NFT, it's also a form of RWA. Because like, for example, if you NFT make a treasury bond into NFT, or make like house depository, etc., into NFT, it's also a way of RWA. And the onboarding process is actually getting sort of more logical and legitimized. So, but I think 1 or 2 years, we don't know, but definitely I agree with you. It's gonna make it. We just don't know the time span. But yeah, Dubai has been exploring this for quite a while. Yeah. Thanks, Juliet.
So yeah, I believe, as we can all agree, so real world assets are the next narrative, but we just can't make it within the 1 or 2 years. So because the same is actually as a financial inclusion for the countries like Africa or in South America, because of course there are so many regulators involved, and of course there should be like a learner period of time to make it happen. But it's I believe it's the goal for lots of people to make it happen. So from my opinion, another thing that we can't do within the next 1 or 2 years, it's Web3 gaming. I mean, the proper Web3 gaming, in the sense that there are a few milestones and the bottlenecks that lots of gamers don't consider on their way to make the proper Web3 game. So first of all, it's all about the storytelling, because the market is so competitive. So it's actually the narrative that nobody is looking at, because like, you know, why should I play the game? What could be attractive for me within the game? Then of course it comes to the strategy and budgeting. So because the proper Web3 game requires lots of resources, big team, and of course the lots of money. So that's why, like, back to the days, there was a certain hype around games. Lots of games, they just like did fundraise, but of course they just ended up not doing even MVP, because the money they fundraised wasn't enough to build the proper game. So, and then the strategy is the most important, because it's all about the in-game economy. It's about the tokenomics, how it operates, how to make users within the game use the tokens. So it's a transition period right now. We might see within the next 1 or 2 years, then we can use NFT, because the main thing is like what users are doing within the game, and they are buying collectibles, and they would love to buy and sell collectibles, and you can do it with the NFT or maybe some external token. You don't need to put all the game on chain to make it a Web3 game. So it could be something like a Web 2.5 game or something. So, some of the narratives actually is that the targeted audience is still unclear. So in general, like to summarize what I've been saying, is that there should be like some Web 2 games, proper Web 2 games, Web 2.5 games, and then probably in 3, 4, 5, 6 years, we can do the proper Web3 game.
I agree. And I think because Web 2 games are very profitable, like they have no incentive to go to Web 3, because everyone try to farm them and dump the tokens and try to exploit the games, right? So I feel like Web 2 gamings don't really have strong incentives due to the crowds trades here in crypto, which is more speculators, more retailers driven. Yeah, and I have seen a lot of gaming decks in like especially in 2021 to 2022, and most of them are just cash grabs, because they just build a deck and then probably like get the material from some gaming studios and then try to raise 1 or 2 mil or 3 mil and then soft rock the VCs. It happens very often, like a lot of phishing, a lot of like tank games, a lot of random stuff. So one thing in crypto investment is that it's so easy to invest into random project and lose your money. So pipelining is very important. And then also, if someone tells you this project will make good money, then ask yourself the question, why me? You know, why that person wants you to make money instead of they themselves making the money? So yeah, just they thought about that. And because I've seen so many gaming decks, and then most of them just rug pull, either hard rug or soft rug. Yeah. Ronnie, what's your take on the NGMI vertical?
Yeah, for sure. By the way, agree on the real world assets taking like another year or two for the most part. We've started to see like the first iterations of like real world assets related protocols like in the beginning of 2021, with like Goldfinch probably being like the one that's like the most prominent within the category. Yeah, but I think that it will take like a lot more time for stable rails to be built out, like people to have like better user experience related products. I also don't know if real world asset protocols have a lot of the kinds of like levels of yield that people are finding it within the world of DeFi. So that's also kind of like a dislocation from like expectations that people have within like protocol users versus like real world asset users are most likely going to be like institutions instead. The category I think is like probably NGMI is like ZKL1s.
DKL ones.
Yeah, I think that like data availability makes it really hard for lots of applications to operate on these L1s in the same way that they operate within the Ethereum ecosystem. Not only that, but a lot of these ZKL1s have like alternative languages outside of Solidity or the most common blockchain-based languages. And we've seen in 2017-18 with a bunch of different L1s come up that it's really hard for these L1s to maintain dev communities when they have a lot of switching costs from Ethereum. And there isn't that many crypto developers, right? Like I think there's like maybe 3,000 or 10,000 developers total. And so if you're building this ZK layer 1 and trying to convince people to program in a completely new language and everything is completely different and you can't like access the data that you need to build like some of the most simple protocols, it's going to be like almost impossible for these people to actually like have their project succeed. We've seen some innovations come up with like data availability being more accessible within ZKL1s, but it feels like the privacy narrative will come into crypto from a different angle than just building a new L1. I think that'll be a pretty stale idea in the future.
Interesting. Yeah, because a lot of people are bullish on ZK, but yeah, it is actually very hard to implement. It's just like there's so many different type of project. Some project are just some like a fork project that only have incremental improvement on existing protocols. Those are you might make money from it, but it's very the upside is very limited because project like this will have like the success of this kind of fork project will be largely dependent on the success of the ecosystem. So you see like when Aptos say is launched, then there's a lot of say swaps on Aptos. There's like options on Aptos, but they don't really have like say much innovation, maybe 10%, 20%. That's already a very fair chunk. And if Aptos APT is not doing well, then it's very hard for project like this to get traction. So I personally think like, you know, marginal increment, like this kind of a small improvement for project are not going to make it. They might have some steam for a few months, but then halas, they just get forgotten by the community. Yeah, and then I think like there's also depends on the founders as well. Like if the founders are more so there are two different type of founders. In crypto, there are some projects. If the dev is very strong, they can spin out the website, they can spin out the deck, and also they can create the protocol actually in 1 to 2 days because the dev have the capability to do that. They have the code base. But then they raise, you know, say $1,000 from $1,000 from each of their communities, say 10,000 members. Then they already make quite some money, and then they can just soft rock the community. And then there's founders who also a lot of US say Y Combinator companies, right? They can just basically raise a fair chunk from good quality VCs and then pay themselves fat salary and then build like build stuff that will make them feel that they are building and also make communities feel like they're building, but they don't actually create much impact to the society. So those kind of projects are also very difficult to make it because the founders are not very driven. They just want to ride the hype, you know, that VCs want to allocate, want to deploy. So yeah, like when we invest, we tend to try to filter those kind of founders. It's quite interesting, yeah. Another question is regarding the secondary market, because we discussed a lot about investment in the primary market. So now, because the happening of Bitcoin is coming in like 2024, so recently the market also has a quite decent rally. I would love to ask our panelists, like, you know, what's your opinion about the current stage of the market? Are we actually moving to more bullish trend, or we're still gonna trend down onwards? So whoever wants to start.
Yeah. Well, the happening is it is happening in 2024. But I think overall, like, there's like a really big correlation between like crypto asset prices and like the performance of like traditional equity markets these days. We've seen like that convergence like really begin in like 2017, 18, whereas before BTC was pretty uncorrelated to like traditional equities. As for so in general, like where is the economy going? I think that like with all of like the bank related bailouts that are happening now, it really like can't get too much worse in a way. I think one of like the problems that happened like over the past bit is international banks had to do what US banks do with putting consumer deposits into low like yield mortgages for a long time. And the US government like bailed out these banks, but will international governments bail out these banks that took like similar strategies to be competitive with US banks? Yeah, it's hard to say. So in general, I think when equity markets start to do well, we'll see like secondary like liquid markets do well as well in general. But I do think like BTC halving does have correlation with general like price go up sentiment. It's just all of this stuff is extremely hard to predict, and prior data is not exactly always indicative of future results as well. So I think it's just about being nimble and being reactive to what's happening in this space. But I think we can all agree that we're all excited about crypto long term.
But interestingly, as we can see, like, there were multiple black swan events happening recently, but regardless, all these events, like crypto market is becoming like more and more sustainable because it's not reacting as much as it did before. So it's definitely kind of the bullish trend, and we can discuss like, it will go up and down, but at the end of the day, I believe like most of the people believe that the market will go up by 2024. So here we are. Just like, remembering that the circles are repeating themselves, and just like be patient, be patient.
Be what? Sorry.
So
Be what? Sorry.
Patient. So it's like just like tolerant to what's happening in the market.
Got it. Got it.
Yeah, I think on my end, obviously, a lot of it does depend on macro, and I think I don't think things are looking too bright at the moment, but I think with regards to your question about the halving, right? I think this time last halving where we were now, like, the halving was like a year out last cycle. I think the sentiment was a lot different. I think everyone for the most part thought crypto was dead, and then after the halving happened and the rally started, people sort of noted this correlation where, like, every halving basically sets off like a new bull run. And what happens in crypto often is trades become extremely overcrowded very quickly, and when a trade becomes overcrowded in crypto, that usually means that it's a sell-off event. So I think after seeing the last halving and the way people reacted to that, everyone's really excited and thinks the halving is like, going to kick off the next bull market, which usually means like more experienced market participants are sort of waiting on the sidelines there, ready to capture your flow, basically. So I hope so, right? You can
Inshallah.
hope. Yeah, inshallah.
So, everyone talks about halving and the bull market. So quick question, anyone has an idea what happens after halving? Why does the bull market come after halving? Does anyone actually have an idea? So I'll just make it easy for you so that you understand. After halving, miners become unprofitable. What they do is they'll suck liquidity out of the exchanges. Demand is growing and supply is less. This is known as artificially manipulating the price of an asset. You can actually go and check this out. This has happened in the last 3 runs, like in the last 2 runs. Once this happens, retail, which suddenly sees Bitcoin hitting $50,000-$60,000, starts jumping in to make it whatever the next all-time high is. You can actually go and check the charts out. Halving sees to it that miners are unprofitable. They start remove liquidity from exchanges. Retail jumps in saying this time it's different, and they take it to an all-time high. Institutionals who have been buying right now dump then and have a great time onward. So for me, I personally believe with the amount of difficulty that's gone up in mining, Move on has come. Bull run is a hockey stick diagram. This is a move on growing. We already have gone up from 15,000 to 26,000. It's a move on.
Yeah.
When you see 50,000 to 150 and 180,000 post 18 months post halving, that's when the bull run is. But as people, we should not focus on chasing bulls. We should focus on getting the right entries. How many of your friends have been talking about Bitcoin in the last 1 month? Any raise of hands? Like going to a coffee shop and people asking about one or two, maybe. A year back, wherever you were walking by, someone would come and ask you, what's going to happen to Bitcoin? Should I buy it? This is the time when people are not there. And this is the time you guys should think about entering. As soon as the taxi driver says, I bought Bitcoin, just sell it. I actually did it at 60,000 last time. When the office boy came and told me I bought Ethereum.
Wow. Yeah. I'm actually also relatively bullish because of pro crypto narrative is getting stronger and stronger with traditional banks failing. For example, US citizens realize their money is actually not too safe in banks, right? Then why don't they look into like hedging assets like crypto? And then with BUSD being taken out of the equation, and then USDC having DPEG issues, and people would be like, hey, why don't I just rotate the stable coins to Bitcoin and Ethereum, some coins like that? Because one Bitcoin is one Bitcoin, right? But one USD varies a lot in different climates. So yeah, so I think we actually, because we're basically, if you look at the chart, we have 3 times trying to get this range. And potentially, I think this is actually a very good signal. Maybe the upside is relatively capped at the moment, depending on how many people are sidelining. But definitely, I think there's momentum to go up. And from like the primary market point of view, because we have seen basically more quality builders building on various chains and also innovative concepts. So when the price is down, DEF is up, then it's always a good time to invest. And for average people, I think it's just a very good strategy to dollar cost average, because it's very painful to be a sideliner. So always dollar cost average a little bit, have your skin in the game, then it's easier for you to feel the pulse of the market and then decide, if you want to double down or if you can take profit. But yeah, I'll never put all the money into crypto because it's a very definitely volatile asset. And as we're reaching to the end of this panel, so I would love to ask our panelists, right? Maybe each one of you give one piece of advice for our audience today, how to make it, yeah. And please, our friends in the back, please keep quiet. Yeah, and then remind people around you to keep quiet as well. Thank you. Thank you. Maybe we can start with Ronnie.
Yeah, sure. If I were to have like a piece of advice for people getting into crypto, and again, I want to clarify, it's not financial advice or anything like that.
NFA.
Yeah. Just like keep reading and keep doing research. There'll always be new technology like conceptualized, and sometimes it's hard to find where the frontier of innovation exists. Some founders work in their own isolated bubbles and they don't have enough conversations with people in the space, and maybe they'll lock themselves in the room and spend 6 or 18 months building one thing. But if they just went out and like had 1 or 2 conversations with the right people, they would have saved like years of their time. So, I mean, as VCs, I think we try to be there for founders and connect them with the right people so they can, because these people, they dedicate their time towards building this stuff, and it's a noble thing to do, and it's really hard. But yeah, I think if you're a founder, I think reaching out for help and talking to people in the space is extremely valuable. Yeah.
Awesome.
So my advice is like, then there is a bull market. So you can just follow the flow, just follow the hype, whatever is like hyped at the market, do the same thing and you will make some money. That's so then there is the bear market. You should do another thing. You shouldn't like follow the flow and listen to the other people, what they're saying, because what is hyped right now, maybe it's not right for you. So what is important at the bear market is to focus on the fundamentals and try to solve the pain points on the market, because of course it's the time for builders. So do your own research, try to explore what is really like, you feel it's the future. So just don't try to speculate, because it's really hard to speculate on the bear market, and more focus on the long term.
Awesome. You rest during the bear market, right? Like take more rest. Yeah.
Yeah, I agree with both of you guys. I think like the best advice I ever got was to not take advice from other people. Yeah, I think like it's always best to build conviction in the things that you are excited about. I think it's always worthwhile to like talk to people and see what others are excited about, and maybe that can help steer you in the right direction. But if there's things that you're excited about that maybe the rest of the market is not excited about, it's not that big of a deal. I think whatever once was a narrative will always become a narrative again, maybe packaged in a different way. So yeah, I think, always just build conviction in things that you're excited about, and try not to get too distracted by the noise.
Being contrarian can be very rewarding, actually. Yeah.
So I have one advice for builders and one for investors. Builders, meet as many people as you can in the next 3 to 6 months. After that, even a small influencer will be flying in the sky and not talk to you. This is the best time to actually go and meet any VC who is available. They are coming to events, good events. You can meet influencers, you can meet real people who are developing. Now, in the bull run, trust me, I don't want to name anyone, but even an influencer in Dubai doesn't meet you as well. For the investors, the key thing is investment is not just about investing, right? You invested in a project and it did 100x. That's not what's going to make you a millionaire. That's winning a lottery. Lottery winners lose money. It's investing right, moving your money well. You had a vesting that gave you a 300x. It's not going to make you 10,000x. It's not the next Ethereum. Move your money from there into a different asset. And third is knowing when to enter and exit. Go to the casino and understand when to get up. People in the last bull run ended up making millions and giving it back because they didn't exit. So investors need to know these 3 things, and builders, stop wasting time, start meeting people. Thank you.
Awesome. Yeah, I totally agree. Having seen like 2 cycles, people who was like your intern become like your LPs, right? This kind of experience, I have that, and it's actually very, very interesting. So bear market is actually the great time to connect with people, especially quality people, because if they are active in bear times, that means they are doing a lot of things in the background. And because in bear market, everyone is poor again, so they are more humble. Like we are more humble, so we talk with each other, we hang out with each other. But in bull market, everyone will be busy making money and see, where they make the best returns. So they wouldn't talk to you if you are not bringing much value, which makes sense. So, try to build more quality connections, pipelines in the bear market, in the building season, and then you'll be able to harvest a lot of good stuff. Nice. Thank you so much for our presenters, our panelists today. Thank you so much for your input. Now, let's give them a round of applause. Yeah, thank you. Let's click. Can you, yeah, yes, everyone can hear me. I think so. Yes. Okay, great. Now let's take a 5-minute tea break and then we'll welcome our demo session and our project on the stage. Belinda, Daniel, nice. Nice. So it's coming. Yeah.
Okay.
Thank you so much. Yeah. Thank you for watching it today. Oh, hey, my portfolio. You guys have you shipped it the tweet? Nice. Okay. Okay. Now, yeah, okay. Hi, everyone. Please move to the front seat and try to keep quiet for our presenters. Thank you so much. Please move to the front seat. Hey, thank you. Yeah, hey, Judge, please move to the front seat. Yeah. Better view. Timeswap. Hey, you're presenting today?
Yep.
Nice. Please, you can go there. Yeah. 创，你不要在这里编辑了，你就直接把他们的东西放出来就好了呀。
I have more boring slides that's what we swapped.
Do you have to?
I think
Because
it's actually it's way better. So
okay.
Good.
Good.
Yeah. I was doing that this morning.
It's always good to. Yes. Yeah. It looks like an L. You guys made it? Good talk. Good. Give me. The Mimo. VC Judge. Yeah. Very cool. Yeah. 好一点啊。 You guys met, right? At Floyd's event, yeah. Oh, he's he's in Amsterdam. Close, yeah. Maybe. Okay, let's start. Hello, everyone. Please get seated. We're about to start. Just 1 minute. Please, everyone, move to the front and keep quiet. Let's start. Hello, everyone. Please move to the front. Move to the front. Hello, everyone. To the front. Yes. Please move to the front. Please move to.
Volume's low.
This one.
Swap.
Yeah.
All right.
Hello, everyone. Yeah. I'm Claude. I work for Mimo Labs as a CEO. And today I'm going to introduce you the Kuma Protocol. It is like, I know the panelists who were right before me. All right. I know the panelists that were right before me were saying that RWA is going to take a longer time to make it. I think I just want to remind everybody in the room that USDC is RWA, and this has been used by everybody for a couple years, and it's been like kind of one of the biggest tokens on chain. So I would respectfully disagree that all RWAs are made equal, and this is why we're going to talk to you about something different today. So my first thing is that I want to tell everyone that, in my opinion, the real-world assets on chains, like things that we're all building here, are better than regular savings accounts. We've seen the collapse of 3 banks during this 1 week. And I think there's one thing that people need to understand is that we're not only replicating what finance has been doing so far, we're doing better, we're going further. And there's a couple of things that is important. The bank yielding products are not transparent, they're not safe. And you essentially have a bank taking risk, but you're the one paying for it. Like, when you go for a savings account, like when you go on Silicon Valley Bank, you go and ask them to pay you some yield when nobody else is paying. You have no idea how they're providing this yield. And when like macro movements happen, you get in trouble for it. And we believe that we in crypto, because of the tech we have, can do better. So let's look at what's better on chain in general when we build stuff. First, like, cryptocurrency is stuff that you own. Like, I'm a strong believer in not your keys, not your wallet, not your crypto, not your money. And this is something that everybody in this room agrees with. Then, like, transparency, crypto is in general transparent. Not like, of course, like not everything has been addressed, but we are transparent by design in open blockchains, at least. And then, like, composability, like crypto is programmable money. It's I think it is key to see like what has been addressed with RWA solutions so far. We have more like assets that you can own. You have a closer ownership to the assets. At least this is the design of the solutions. You have transparency. Some solutions are somewhat transparent, and composability. Most solutions in the RWA are not. And I think like a lot of people who are saying that real-world assets on chains are not going to work are basing these assumptions on what has been done so far. And I think we need something different when this thing is going to work. Okay, so here's Kuma. We built this thing to tokenize securities all the way into stablecoins. like why stablecoins? I'm going to answer later, but what we do is that we have a regulated company that turns real world assets into securities, like a real world asset security to NFTs, kind of like what Juliette was mentioning a little bit earlier, like NFTs can be used for more than PFPs. Well, we're tokenized securities like T-bills into NFTs. But then we have a protocol like running fully on chain, fully decentralized, that makes a decentralized stablecoin that is backed by these NFTs. So essentially you have stablecoins that are paying people that are backed by NFTs that are themselves backed by real world assets. It sounds a little bit complicated, but this is the steps it took for us to make a decentralized system that still has the benefits of a decentralized stablecoin with the benefits of centralized yield. Like, so you would go like, why stablecoins? Like, there's many ways you can tokenize like securities on chain, and why did we go for stablecoins? Well, the thing is that liquidity, like every solution in the real world asset world has been like plagued with terrible liquidity. But thanks to the MM model, we understand that the more you expect something to move, the more expensive it is to provide liquidity for it. So we went with something that just doesn't move much, a stable token. And it's most things already in DeFi are essentially built for stables. So the first token we're releasing is called USK. USK stands for US Kuma. Like, it's not exactly original name, but yeah, it works. And it's backed by NFT that are secured by T-bills. It yields roughly 5%. And well, it's going to be released next week, assuming the vote goes through. The model of USK is simple. It's a rebase model. You have 100 in your pocket today, you have 105 in 1 year, but the balance keeps accruing like every 4 hours. No user intervention needed, nothing. I think the best way you can think about it is that it's a USDC that pays. So any DeFi strategy, anything, like even people who do not understand much about crypto can just decide to hold on to this asset. It behaves exactly the same as any ERC20, except it's not freezable. You cannot like go like Circle or I and Mimo cannot go in your wallet and say, now this address can't move anymore. It's not backed by some mumbo jumbo inside of a bank. It's backed directly by T-bills that you can go check and audit by yourself. And it just keeps going. So we're not going to stop at sovereign bonds. We're going to go for like corporate debt as well, because as somebody was mentioning earlier, people are used to a certain type of yield in DeFi, and sovereign bonds paying only 5% might not be enough for them. Of course, we're believers in that education is the first thing, and that you need to have people educating themselves for going for the riskier solutions if they want to. So we're going to like tokenize bonds and debt of different type companies. Some will be paying more, some will be paying less. They will be more or less risky. Choice should be to the user. Now, like if you start tokenize crypto company, you have indirect exposure to crypto via real world assets, which is something that could be very interesting. So then like, we're going to start by green tech companies in Europe and outside of Europe. And after that, shares of companies. So when, sorry. Yeah, next week. It's coming next week. It's already live on beta. I can actually show you how those NFTs look like. Of course, we're a DAO, so we still have to go through a proposal. We still have to go through acceptance of the community. That's the thing of a decentralized stablecoin. Like USDC didn't have to do all this, but again, USDC is freezable, and we're not. So, John, can you check? Like, we're gonna just show on OpenSea how a T-bill can look like. And that looks like this. But can you scroll down? Yeah, look at the trades. This is a T-bill from US, USD. You can actually see the eyes in. We have full transparency. Ask Circle, ask USDC. You will never see anything like that. We are like coming with the first stablecoin that has any form of transparency. And well, it's going to be available to anyone. Anyone can see what's behind the stable coins, because you should not have to trust Silicon Valley Bank. You should not have to trust Signature. You should just have to trust your ledger. And with USK and Kuma, you're only trusting your ledger. And of course, we have a network of custodians, but it's a network of them. And you have, by your terms, access to the bills, access to the bonds. We cannot leverage them. Everything is segregated. We're not operating like a bank. We're making sure it's a transparent system, and it goes beyond the existence of the company. Mimo can die as any company, but this system will outlast us. This is why we're in crypto. We've been in crypto for 10 years. Like, we're not like people who came like in just the last cycle and tries to catch up on a wave and ride the next wave of real world assets. we're trying to actually bring like what crypto was supposed to be to the hand of people that are using it every day. We are really making it simple for anybody who holds crypto, anybody who holds USDC to have access to the yield that Circle will make instead of you. Like USDC is Circle making like 5% a year because they hold your money. USK is you making this 5% a year because you're the one who should own it. All right, thank you. Oh, sorry, I forgot to mention the traction. We already have like a $55 million in before launch. Hey, thanks.
Yeah, not often. Wait. Oh, big congrats. Close. We have Q&A session. Okay, we'll have a 5-minute Q&A session from the VC judge. So, or from the audience. So, if anyone has, Jake, I think Jake got a question.
Take your mic.
Thank you for your presentation. You currently have different projects. Can you explain the relation between like your governance token and what you're doing here? Is there any relation between those?
Yeah, so the mic works even better now. So this system that we just described, the interest rate that are going to be paid onto every token that the DAO releases, and essentially the way tokens are going to behave are all controlled by a DAO. The governance token has the power to tax the yield, the power to put the yield in competition between the different stablecoin, the power for companies to decide if they want to boost the yield of a certain company. We are actually coming with a gauge system to make it like simple for people to vote for X and Y type of token. But essentially everything like which type of companies are we going to list, which type of tokens are we going to have is governed by the same governance token that we already have.
So this is Mimo Capital token, right?
Yeah.
Hi, I'm Jake. I'm one of the VC judges on this. I had a question for you, which was just with the green bonds, how are you dealing with the default risk of holding bond positions? And what are you doing in general insofar as kind of interest rate risk like duration when you're holding bond positions as well?
All right. So again, like Kuma intends to be fully transparent by design, which means that let's say we're going for a treasury bill. If the US defaults tomorrow, well, yeah, the treasury bill is not going to be worth much. We are applying exactly the same system to the corporate bonds. So what it means is that we're going to show the rating of every asset that is backing the type of tokens that you want to get. And if you're buying the stable coin that is backed by company X, like maybe some company here in the DIFC, you're getting a stable coin backed by them, then we will provide you all the information about that company. So then when the user makes their choice, they understand that maybe there's a default risk, maybe there is something. We're not going to commingle all those things together into one stablecoin. We're going to make like sure that every token issued by the DAO is following a different model of risk. This is what I meant when I said we believe in education. People must understand the risk that they're taking, and we do not want to act like a hedge fund or a fund manager. Everybody is kind of their own hedge fund in this case. Of course, because it's an open protocol, somebody can come and decide to make a fund out of our NFTs or our tokens, and then like take care of producing better yield with a different risk management strategy. But this is not where we want to stand. We're an infrastructure provider.
Yeah, final question. So do anyone have a question? You follow? So, okay.
So is it safe to say that people minting your coin or the people exposed to it, are they exposed to specific tranches of these debt positions? Or are stable coins kind of belonging to each one? So say if someone takes a stable coin that's backed by a AAA bond and someone takes one backed by an A bond, are those stable coins fungible? And are they transferable? And do they act the same way on chain?
Transferable, yes. Fungible, no. Like, it's not like you're gonna be able to exchange like in this as the same token, a bond backed by the US government and a bond backed by some random company. However, they're exchangeable, and we intend to fully leverage the fact that they're all worth $1, at least when they go well, to trade them on Curve, to trade them on, like, to make it easy for market maker to provide liquidity for them. So transferability, yes. Fungibility, no.
Awesome. Thank you, Claude. It's a very good presentation. And big thanks to Mimo Capital also sponsoring the whole event today as well. Big thanks. Awesome. Next, we'll have ZKX on the stage. So let's give ZKX team a round of applause.
Thank you so much, Belinda. Thank you so much, Belinda, for hosting us and getting us over here. So we're ZKX, guys. My name is Naman. I'm one of the co-founders of here. ZKX is a derivatives DEX that we're building on top of Starknet with a very unique and I would say quite radical liquidity mechanism, rewards mechanism, and a lot of crazy innovations that you're going to really love. The story of ZKX was actually quite simple. About 3 years ago, we were actually, yeah, thank you. Sorry for that. Yeah, the story of ZKX is actually quite interesting. About 3 years ago, and me and one of my co-founders, we come from venture capital as a background. We were both at a very large early stage fund. We had recently invested in BitMEX, and we saw the massive opportunity and growth that a derivatives exchange could bring to emerging markets. At that point, we saw a very fundamental problem. You know, this was a time where the Binances of the world had already risen, but what you were seeing on the other side was Synthetics, was Mirror, which had a lot of interest, but the retail user was never really getting attracted to any of this. And despite understanding and being one of the few people who created the fund's thesis around Web3 investing, what we really saw was a massive mismatch in terms of retail users not understanding the value a DEX could add to them. And that is why about 2.5 years ago, we quit the fund and we started on this journey to build ZKX today. So the idea was quite simple. Yeah. Thank you. Perfect. The idea was quite simple. Can you build a mainstream retail adoption DEX that has a simple user interface that is retail friendly, easy to use? Retail users will only come when you have abstracted away the clunkiness of a DEX. It should be fiat on-ramps and off-ramps because that's what retail users need. It needs to be easy to understand, easy to use, fully accessible with enough offerings, because most DEXs back in the day and still today actually use an oracle like a Chainlink or something, and they're always limited by what they can really offer. They can never match a centralized exchange in terms of offerings, and they always lose out on something called transient capital. So when you have the new hot coins coming up, a centralized exchange might list them, you would want to jump on there, trade it, but a DEX is never really able to do that. And all of that stems down to the fact that how a DEX was really being functional and built. So we had to really start from the ground up and pretty much scale our entire infrastructure. So ZKX is a DLOB DEX that enables multi-asset perpetual swap trading with high frequency and low costs, which means we are an order book model. The protocol had to be retail and institutional friendly. It had to be a pure decentralized limit order book, which does not exist till now. It has to have high frequency support as well as everything that retail truly enjoys. And everything we thought, because one of the fundamental problems is that when you go out and try to create something, there is nowhere in a blockchain where you can do complex computation. And that is the reason why everybody who calls themselves a DEX, but has an Amazon server in the back end running their order book, is not really decentralized. So it was a very massive infrastructure problem that you want a decentralized limit order book, but there's no way to do it. So we had to create one. We created our own 81 cloud computation solution, which is fundamentally a decentralized AWS. It has a cluster of node architecture. It has its own consensus. Inside the cloud computation solution is where our order book sits. It has about 20 to 30,000 TPS in terms of matching. To give you a perspective, at current scale, Binance has a TPS of about 1.5 million. DYDX used to have something around 300. So we're at about 20 to 30,000 in our network. What it also does is our solution also holds a data layer. We are not dependent on just an Oracle, a Chainlink, or anybody else. We can pull in data from centralized exchanges, from oracles, from really anywhere, because the computation solution is basically our bridge to the real world and can pull in data from anywhere and bring it on chain. To walk you a little bit more, so this is basically a very simple stack of how ZKX functions. You have all the core wallets because we're on Starknet fundamentally. But we thought, hey, why don't we make our own wallet as well? Because what we thought was all the great wallets on Starknet are there, but if we're building something from the ground up, take the Apple approach. Why don't we build the entire stack that is able to give us enough offerings? But then we thought, wait, we're also VCs after all. What if Starknet has no TVL? What do I do then? I'm building all of this, but I still have a very massive ecosystem risk. So we built Starkway, which is basically our native L1 to L2 bridge currently, which through any EVM chain, you can jump funds directly into L2 into our wallets. The wallets are also can be connected across all sorts of apps on Starknet, which is not something that we're releasing right now, but we've already built it just the way it is. All of this sits on top of, we also have our data layer, which is basically our in-house data processing layer. The DLOB is our decentralized limit order book. All of this sits on top of our cloud computation solution, which eventually posts proof, ZK proofs to Starknet. Fundamentally, it can post proofs to anywhere, really. The reality is that when we started building, and I think this was one of the core topics over here as well, that when you start building about 2.5 years ago, we were one of the first projects on top of Starknet. And a lot of people ask us, why did you go for Starknet? Well, the simple answer was at that point, and we still feel it is one of the most advanced ZK rollups out there. They were super supportive of us. They gave us a lot of grants. They invested in us as well, as you'll see later on. And we were really able to fully use the information, the access that we had to come up with the right solution that is truly independent and innovative. And that's basically what took us down this journey. These are our key innovations, and we had to do a lot of them. If you build something like what we're building, fundamentally with free data or free availability of data and a decentralized order book, you can list anything out there as a perpetual swap. But a lot of these assets are extremely volatile. So I can't use a traditional funding rate. So we came up with something called ABR, which is an adaptive balancing rate. It uses Bollinger Band functions to make the funding rate more aggressive for new volatile assets. So it corrects the markets and creates less arbitrage opportunities within the order book. Second is basically a T-swap. Most of you might remember if you're a bit of a DEX nerd as us. So, around 1.5 years ago, we were seeing, these new kind of tactical swaps, the paradigm everybody was actually coming up with, which essentially is a powered perpetual. That was the original idea behind this. But we realized that powered leverage doesn't really work. I mean, BitMEX has 100x leverage and you get liquidated in seconds. So can we create something which is more usable? And then we got our inspiration from Wall Street Bets and Robinhood. We said, hey, options are quite interesting. Can we make an option strategy wrapped within a perpetual swap experience? So anybody over here who wants to do a delta neutral strategy, a butterfly or iron condor, whatever, but with the user experience of a perpetual swap, T-swap was the instrument for that. It will mimic and give you the exact payoff of the corresponding option strategy, but with the user experience of a fundamental perpetual swap. Select asset, select strategy, off you go. It's basically as simple as that.
Awesome, Navan. I'll give you 1 minute to wrap up.
Oh my God, this is going to be long. I'll make it quick, guys.
Awesome.
I tried basically our own quick reward distribution function that actually awards traders by top performing markets in multiple parameters. If I talk about processing, we've already spoken much. Bridge, I've already covered over here. Liquid governance. One of the most interesting things that we saw that how do you break the link between token holding and governance? Because what was happening in the classic curve economics, tokenomics models is people who actually hold the tokens don't use the platform, but they still govern it. So the whole concept of, a DAO really being able to function the way it should, quite ironic, but it doesn't work. We came up with something called liquid governance. What liquid governance means in very simple terms, you get ZKX tokens, you stake them, you get something called VGS, virtual governance share. Imagine it's something like a soul-bound token that you can't sell out there. VGS has inbuilt decay. So you have to either keep staking or trading to accrue VGS. VGS gives you access to rewards, not ZKX token rewards, USDC rewards, because as a protocol, we make a lot of USDC. Why don't we share it with you? Keeping it simple. On top of that, while you have VGS, you have to continue to engage, and only then can you really participate in the governance of the protocol. So governance for the people who actually use it, not who just hold the tokens. This is a very interesting comparative overview of our ecosystem. As you can see, we're fundamentally the only DLOB, which could really, I'm done. Yeah, so we'll quickly go. Quick run up of what our traction is, guys, over here. Everything organic. I think we started doing this about 12 months ago. It's been quite crazy. Our last community call, we had almost 1,700 people, 50 people sign in, and it's been quite interesting. This is our team, 33 people and
Awesome.
counting.
Thank you, Naman. Everyone give Naman a round of applause. Now we'll have 5 minutes for Q&A. Yeah. So any questions from the audience, and everyone else, please keep your voice down a little bit. Thank you. Okay.
Yeah, please.
Hey, Naman. Finally, great to meet you in person. We've been on a couple of calls before as well.
Yep.
No pitch is complete without traction, right? Is your product live? And could you talk a bit more on the traction side of things?
100%. So, right now we are in that stage where our testnet is coming out in the next 2 weeks. So we are obviously a pre-product stage. Fundamentally, all the traction that you see is basically from our community engagement programs. We have one of the most active Discords out there in the Starknet ecosystem. In terms of pre-product tractions, I feel we're one of the only projects where we've seen so much regional channels. We have 7 regional channels. All of the content is in 7 languages. We're seeing traction across all emerging markets: India, Indonesia, Vietnam, Turkey, Iran, Kazakhstan. Really.
But yet to get there when you do the testnet. I mean, socials
Correct.
won't count.
However, I totally agree with you. But at a pre-product stage, I think the best way to look at traction is looking at organic social engagement. So that's what we can present.
And you've been quite innovative and bold with making some changes to existing governance
Yeah.
and also something on the bridging side. But then are you focusing on being a retail friendly DEX or a perpetual DEX, or being an infra company and then doing 10,000 products in the future?
That's a great idea. The reality is that in order to build the vision of ZKX, all of these were things we had to do to make ZKX work. ZKX is to make something function, we had to build all of this as a vision, because ZKX is going to be a DEX eventually. To be very frank with you, the DEX architecture, the DAO architecture is already being built. So ZKX is going to be a DAO quite soon after launch.
Okay.
And then we are also seeing a lot of interest for the individual products and components that we built from a lot of, I'd say, partners and investors. But that is something that we will definitely work towards. But right now, the focus is to launch ZKX.
Just last question from my side. There's so many new DeFi focused L1s that are coming on Cosmos, right?
Yeah.
And they're targeting faster execution, right? Say Buru, thousands of them, right? How do you really differentiate, apart from being on Starkware and being the number one there? How do you really differentiate with the global market, apart from the couple of innovations that you guys have tried to work on?
Yeah, the idea was pretty simple. When we were building a product, we're not really building it just because we're getting traction because we're in Starknet, really. Fundamentally, the product in itself is, I'd say, pretty much ecosystem independent. It can pull in liquidity from anywhere. The reason the product is really out there and why we have Starknet is because that's where we post our ZK proofs. We can post it on Scroll, we can post it literally anywhere. It doesn't matter to us. What really matters is making a product that I can actually go out there in these markets and sell to the end retail user, because there's about $100 million of liquidity that flows between the GMXs, the DYDXs of the world. It's the billions of liquidity out there that flows on the Binances of the world that we are going after. which we feel is the real market. So the problem is not to gain traction in this market with my tokenomics, with my rewards ecosystem, with this product. I don't have a problem with that. It's how do I get the next billion people to actually buy into a product, understand the usage of a DEX, and really understand the value of self-custody, of using decentralized products. That's what the end game is.
Great presentation, Alexander here. There's quite a lot of perpetual DEXs in the market, right? And as Karan said, you have a few innovations that I think are good. One of the things that I saw was you have some Quest. Several perpetual DEXs kind of focus purely on like attracting liquidity.
Yep.
What are some of the mechanics or innovations that you have that will kind of create stickiness for traders?
Great question. So to talk about this, I'm going to go back to my overall liquid governance model, which is quite interesting over here. Because, and this is what we've really seen across the board, there is this massive problem in the industry of creating a circular economy. You deposit my liquidity, get my rewards and my native tokens, and there's this constant circular economy thing that is going on over there. We thought that the rewards ecosystem should be in USDC, so a trader can actually use it, fundamentally use it, and that makes my token full utility. Because when you get my token, you're not going to earn more of my tokens, burn them, sell them out in the market, and eventually then create some liquidity out of it. If all derivatives protocols or any exchange, as a matter of fact, we make massive amounts of income in general. Why cannot there be a very simple mechanism where I'm just sharing part of this revenue with the people who stake my token, who use my protocol? And that simple value function, or that simple sell, I think is the largest driver of why we're seeing so much interest from market makers, from retail investors, from everybody, because fundamentally quite simple.
Awesome. Thank you. Thank you, ZKX team,
Yeah.
for the presentation. Next, we'll have Phaver. Awesome. Tommy from Phaver to give us a presentation. Let's give him a big round of applause. It's a social fi project.
Thank you, Belinda. Thanks for inviting us. Can we put it big screen? Can you put it full screen? Oh, I think so. No, I'll do manual. Yeah, this one. Okay, I think that's big enough. So hi everyone, I'm Tommy. I'm one of the co-founders at Phaver. I'll just try to spend the first 5 minutes to set up the scene. Why should anyone care about Web3 social? And then speak a bit about Phaver. So let's maybe start with this picture here. Do you guys see this tiny ball here at the bottom? That's the 5 million DeFi users that currently exist. So that's probably the nerdiest version of finance. If you think about crypto adoption overall, crypto Twitter is probably 50 million max, and you might have 400 million people on the planet who own crypto currently. And then on the other hand, pretty much everyone has a social media profile. So now the question becomes, why should I care? You already have Facebook, you have Twitter, you have Instagram. It could have been that your grandmother got deplatformed from Facebook, which actually happened to one of our founders. That's still a low likelihood. So here's another picture. Why should anyone care? So why am I highlighting OnlyFans here as a logo? Does anyone have a clue? So OnlyFans is actually the fairest platform out there, sharing 80% of their revenue to the creators. And if you look at this 7 billion total creator earnings, OnlyFans probably makes up for 50% of that. So something seems off with this picture if the platforms are making 230 billion revenue and creators are only making 7 billion of that. So that's a reason why the creators should care. So if we can move the creators, we can also move the masses. Here's another interesting picture, just kind of moving back in time. So what's interesting in here, I think in each of these waves, you have 5 times more builders entering the ecosystem. And I think in everything in this life comes with a lag. So each time, the market overreacts, underreacts, but as a key KPI, each time, we enter new verticals. So this is a courtesy of Messari, who predicted already in August last year that after NFTs, social tokens would be the next wave. Actually, if you scroll back even further in time, even before blockchain, I think kind of the core thesis is that, software has been eating the world. And like, at least how I see blockchain is the new architecture of the internet. And that's why it's kind of interesting to see what's in the next wave. So here is the latest data from Lens protocol. So we are the biggest app on Lens protocol right now, have been about 50% of the posting volume. So Lens is still relatively small, about 100,000 posts per day. So that's a minor drop in the ocean. In the grander scheme of things, Phaver is probably 5x this volume because we allow people to do also off-chain posts. It's actually a cool thing. This is a Dune analytics dashboard. So because everything is on blockchain, anyone can spin out these charts. So this is the posts, mirrors, which is retweet and comments on the Lens protocol. There's another courtesy of Messari, looking at the total or the overall market map of the space. So at the bottom you have the kind of the railroad guys, so Ethereum, Polygon, etc. Then you have the Super Marios who've been building the pipelines. On top of that, so Lens, Farcaster, and CyberConnect being the largest ones. There's a lot of cool companies building the so-called mid layer. For example, XMTP is doing wallet-to-wallet DMs who we are integrating with. I'm not sure if there's anyone in the audience who works for any of these logos, but I think the cool thing here is as well that, in Web3, you're never building alone. That's a good quote from Stunny. You can see Phaver here, top left corner as one of the front ends. So if we do a very quick deep dive on the key protocols, what Phaver is actually doing is trying to integrate all of these. So we are right now live on Lens and CyberConnect. So same as with when email came out, if you couldn't message your friends if you had a Gmail versus Hotmail, that's essentially what we are providing. So some of your friends might be on Lens, some of them might be on Farcaster, some of them might be on CyberConnect. All of these are gated access right now. So we are trying to integrate all of these to provide access to all of your friends on chain. So what is Phaver building? So I think one good way to look at this is that in Web 2, social media was more like a cult. So if you leave Facebook, you have to leave your friends behind. In Web 3, how we look at it is more of a nightclub because you own your social graph. You can go anywhere. It's more about who can provide the best experience to the people who can go anywhere. So while Zuckerberg has been building a 3D world, which is pretty much empty, at least looking at the latest layoff numbers, and Elon Musk, after his LBO, is trying to sell the blue ticks for $8. What we are building basically is based on these 3 different pillars. So as I already mentioned, we are integrating all of the social graphs. Then we are combining essentially your on-chain assets, which comprise your reputation. So whether it's your NFTs or your Degen score, your online achievement token, these all count towards your reputation in the system, which then basically determines your rewards in the system. And I think any social is essentially gamified. Even in Web2, it's about, you know, collecting likes and followers and status.
Awesome.
Okay.
I'll give you 1 minute to wrap.
Let's keep it social and move to Q&A. So these are the latest numbers. We have around 200,000 people on the platform. It's quite active. So 1/3 of them are daily actives. As I mentioned, we were 50% off Lens Protocol last year. And I think we have more than 10,000 CyberConnect profiles connected in the past 2 days after the integration. Let's move to Q&A. Thank you.
Awesome. Awesome. Impressive numbers. Great. Any VC judge got questions? Feel free to ask away.
Hey, Tommy, great presentation. Yeah. Hey, Tommy, great presentation. Since we're talking about traction, what is the average engagement time? Like, because SocialFi is an attention business, right? You need to grab attention of the user. So what's the average engagement time at the moment?
Yeah, that's a good question. And actually, we've been quite surprised. So it's 3.5 minutes. That's 30 seconds longer than what actually Instagram is having. So despite, you know, us kind of still lacking majority of the features that we are planning to build, the engagement has actually been super high. And I think it's tied to the incentives on the platform. So yeah, sorry, go ahead.
And because you're decentralized, non-custodial, right? How does moderation operate? Like, centralization have that curation model, you know, algorithms in place. So how do you basically fix this in Phaver?
Yeah, that's a great question as well. So right now we have to comply with the Apple Store guidelines. So we have an internal team who's basically moderating our mod queue. What we actually want to build as part of the token economy is a consensus mechanism where people have to spend certain amount of points in order to report the post, and then kind of if everyone agrees in a randomized manner, you can earn from the moderation aspect as well.
And last on my side, yeah, that would work for sure. At the moment, Lens has this, you know, known problem with they've been halting the number of users that are being signing up because of this gas limitations with Polygon. How do you guys navigate that situation? You know, because end of the day, it's a lot of friction, and your end user is a person who's using Facebook and Instagram. He doesn't care about decentralized social at the moment. So how do you guys simplify that experience and navigate this whole Lens protocol issue?
Yeah, no, that's a great question. And I think Lens was doing 26% of all of the Polygon gas fees at some point. So that's like, you know, you burn more than 10 million per year. We have an NDA with Lens, so I can't kind of talk about the exact detail, but there's a V2 coming up, which essentially provides 50,000 transactions per second. So that's the scalability side of things. And then I think kind of what we've been learning along the way has been that, you know, when you kind of start from the scratch, first you have the farmers, then kind of people move up in the value chain. So you have people like the carpenters or whatever, trying to actually make good content. So it's like an educational process where we try to incentivize people to do the right thing, and at the same time kind of open the gates once the blockchain is ready for the scalability of it.
Thank you.
Hi, thank you for the presentation. And I understand how you guys doing with the user acquisition, but also I want to know what's going on this other side of revenue generation. What's going on at this moment?
Yeah, so right now the biggest kind of thing for us is just to increase the user base. We've actually done some pilots on advertising and gotten like 15,000 in a single NFT advertisement. So essentially how the token ecosystem is planned to work is that you can buy visibility either as an individual or as a brand on the platform using our native token, because essentially you know, the utility and exit liquidity needs to come from somewhere if people are earning on the platform. So that would be the biggest revenue stream for us going forward. But so we have, for example, the latest cool ledger with kind of the picture display. They want to already do advertising on the platform, but we just want to focus on the kind of user experience as the first step instead of the revenue. But yeah, great question.
Awesome. Thank you. Thank you, Tommy from Phaver. Next, let's
Thanks,
give him a round of applause. Next, we'll have Amit from Timeswap. Let's give him also a round of applause as well.
Hey everyone, my name is Amit, one of the co-founders of Timeswap. While we are just setting this up, just to set some context, Timeswap is built.
Please remain quiet and keep your voice down a little bit. Thank you.
Thank you, Belinda.
Tommy, later we'll have project.
Everyone, my name is Amit, one of the co-founders of Timeswap. First of all, thank you to the Sharding Capital team for organizing this. We're having little technical issues, but hopefully we can get through this. Chung? All right, so what is Timeswap? Timeswap is building the world's first fully decentralized AMA-based money market protocol. It is the only Oracle-less and fully permissionless money market that's currently live across any EVM chains. It is a base DeFi primitive with which you can create many interesting, let's say, financial products that have, let's say, fixed maturity. It could be like lending, borrowing. We can build options. We can build structured products. So before I move into like what Timeswap is, just to set a bit of context on what's the current market structure within lending borrowing, right? If you look at lending borrowing today, there are predominantly two types of, let's say, designs. One is the continuous protocols like Aave, Compound, Euler, which essentially allows you to lend your assets without a duration for, let's say, you can, let's say, enter and exit the pool anytime. But obviously, because of this flexibility, what it means is that your yields are typically lower. Now you have the second kind of design, which is the fixed maturity protocols like notional yield, which essentially allows you to earn a higher yield, but your capital is, let's say, locked for a fixed duration. Now, what we realized was that there is a gap in the market where you can build a product that essentially combines the best of both of these worlds. What is that? There is a product that can essentially earn you higher yield at the same time. Let's say it gives you the flexibility to move in and out of the, let's say the pools. Now we have a similar product in traditional finance, which is basically the bonds. Like bonds allow you to, let's say, earn a fixed yield at the same time. Let's say you can exit your bonds in the secondary markets. But unfortunately, today we don't have such a product in DeFi. So that's where Timeswap comes in. Timeswap enables you to essentially earn higher yields at the same time, giving you flexibility to move in and out of, let's say, pools at any time you want. Something else that we have seen in DeFi over the last year is how the yields have been compressing across the ecosystem. Like we used to earn 8 to 10% stable yields last year. Now we earn 1 to 3% on Aave. But What we've seen is that slowly and steadily capital is, let's say, moving away from these continuous protocols to, let's say, either fixed term protocols or, let's say, decentralized options vaults. Now, this is also very similar to the behavior you see in like traditional finance, right? Like we keep only like a very small portion of our capital in a savings account for, let's say, short-term liquidity. Bulk of the capital is locked in, let's say, long-term products. So that's how typically we see in like traditional finance. And what we expect is over the long term, like DeFi will also replicate this kind of a market structure where bulk of the capital will be locked in fixed maturity products, but there will be some, let's say, utility still to have some short-term liquidity. Yeah, so something else about the current, let's say, DeFi money markets, what is preventing them from, let's say, scaling to long tail assets is the Oracle manipulations. Now, we've all heard countless Oracle manipulation hacks that have happened over the last couple of years, like Mango, Venus, like Ryrie Capital was hacked multiple times. Now, all of this happens because the fundamental design depends on an Oracle to maintain, let's say, the collateralization. Now, this essentially prevents the scaling of money markets to long tail assets. You can't list a long tail assets because it's like a free open bounty for a hacker to come and do a flash loan and manipulate and leave the protocol with bad debt. So these are like two fundamental issues that we identified in the current market structure of DeFi, which we wanted to fix. So just to summarize, like what, or let's say why Timeswap? One is that you're able to earn a higher yield due to the fixed maturity kind of a design. Two is that it can cater to both the top tier assets as well as the long tail assets. And most importantly, we're able to do this in a completely secure manner because we don't use any oracles. It's a completely oracle-less product. The market size, I think I don't need to get too much into this. It's essentially the entire market size of any crypto assets. So like Uniswap essentially is catering to the entire market cap of tokens. And essentially our goal is that Timeswap eventually becomes like Uniswap, but for lending and borrowing. Just a little bit of stats on the user activity. So our product has been live on the Polygon mainnet for the last 1 year. We've done about 45,000 plus transactions, about 7,000 plus unique users, and about 8 million plus volume. The important thing here is that all of this is organic traction. We don't have a token yet. There is no incentive. This is all organic traction from our end users. The V1, like I mentioned, has been live on Polygon for the last 1 year, but we have just launched the version 2 of the product, which is a significantly upgraded design. This is currently live on Polygon as well as the Ethereum mainnet. Some features, let's say over the version 1 is that the lenders and LPs can now move in and out of the pool anytime. This is not possible in version 1. Bi-directional pools, what this means is that USDC ETH and ETH USDC pool are essentially the same. So capital efficiency is significantly higher. The pool is always over collateralized, which is not the case in version 1. And you can always reuse the borrower's debt. That is also improving the capital efficiency of the protocol. Yeah. Just in terms of some go-to-market. So currently, like I said, we are on Polygon and Ethereum, but soon we are going to be live on Arbitrum as well. And next week, obviously, everyone's waiting for the Arbitrum token. So we're going to be going live on Arbitrum, launching with the Arbitrum token itself. So that's next week. We've already have partnerships with multiple projects who are going to work with us to like launch their pools on Timeswap. Let's say once we go live, we are offering a couple of interesting products called initial options and initial debt financing. Both of this is possible using our AMM primitive.
Awesome. Awesome.
Yeah, I think I can wrap up right now.
Yeah.
Or maybe I'll just quickly run through.
Yeah, go ahead.
Next. You can go.
Next.
Go. I'm not going to talk to the team. I think our advisors, Sandeep and Jayanti from Polygon. We have some really nice investors from the past from Multicoin Mechanism Defines. And we have a pretty elite set of angels also advising us. So I think I'm going to wrap up here. I'm happy to take any questions from anyone.
Great. Thank you so much, Amit from Timeswap. Everyone give a round of applause to Timeswap. Any questions from the panel?
Yeah. But you guys are really, heading towards the, super cap efficiency, kind of, reusing borrows and the debt. But we all know, especially with money markets, like the risks that we've seen in the past a couple of years are like, you're really going down the risk curve. How do you guys mitigate this?
Yeah, I think in terms of mitigating the risk, the way we are looking at is our principles very much reflect that of Uniswap, that the protocol doesn't want to, let's say, take on the risk management. We want to outsource the risk management to, let's say, the market. So essentially the market or the free market will decide what is, let's say, the risk curve, like how do you price this asset. So let's say, like currently we have the Blur USDC pool, right? So when we launched it with something like 25% APR. Now it's up to, let's say, participant in the market if they want to take that pricing or no. So you can think of it such that instead of, let's say, in Aave, the governance manages the risk. Here we are outsourcing that risk to the free market. So you actually do risk management with capital instead of voting. That's basically the principle behind like what we think of this. Thanks, bro.
Anyone else got questions from the VC? Okay.
Hi, how's it going? I was wondering, for tail assets, so ones with like low liquidity, more susceptible to manipulation, how are you planning on facilitating borrow markets for them?
Sorry.
How are you planning on facilitating borrow markets for tail assets? So things
tail
that are
assets.
less liquid, more susceptible to manipulation.
Yeah, I think the fundamental difference here is that even if somebody tries to manipulate, let's say, an asset, since we don't read the price from the oracle, it doesn't impact our pool. So the only way the price changes is if somebody does a lend or a borrow. So when you lend into the pool, it reduces the interest rates. When you borrow from the pool, it increases the interest rate. But the collateralization, or let's say that also varies slightly. But the idea is that we are not ascribing any sort of, let's say, opinions on the risk of a specific asset. We are letting the free market decide what should be the ideal risk for this asset. If you believe this is decent pricing, you can lend. If you don't, you can borrow and short. So I hope that answers the question.
Awesome. Thank you so much, Amit from Timeswap.
Thank you.
Thank you. Next, we will have Timmy from Furion team. Let's give him a round of applause.
Testing. Oh, great. Hello, everyone. Hello. Hi, this is Timmy from Furion. Welcome to the NFT Casino. I'm the co-founders of Furion. Furion is an NFTFi protocol which provides NFT fractionalized derivative, borrow and lend, and NFT derivative. Before I'm talking about money market, let me talk about how to. Oh. Just a moment. Okay. Let me talk about how we fractionalize the NFT. We will have two ways. The first way we call swap, which means you swap your NFT to the pool and you will get 1,000 FX token. FX token is just a symbol. When you swap your BAYC, you get 1,000 FBAYC. You swap your Asuki, you get 1,000 F Asuki. Of course, anyone hold 1,000 FX token, they can get back the NFT. So this is the first way. The second way we call lot. Of course, a lot of diamond hand, and they don't want to sell the NFT. So this function is you log it, and you will get 500 FX token. And within 2 months, only you can redeem the NFT. So this is the way we increase the capital rate, utilization rate for the holder. Then after we convert NFT to ERC20 token, I believe utility is the king. So we would like to provide more utility to the ERC20 token. The first way is called borrow and lending. Anyone know Bandao or Paris Bay? Bandao or Paris Bay? Oh, do you know Paris Bay just hacked 3 hours ago? Oh, Jesus Christ. So for current NFT borrow and lending platforms, user will put their NFT to the pool, and they will get back Ethereum. This is all the current market competitors. But for Furion, we are not. You can supply any ERC20 token, especially for the fractionalized NFT, and you can borrow any ERC20 token. So what makes this difference? The first one is you can supply to earn, which means when you use Belinda or others protocol, you have to borrow some money out. But how about you only want to use your NFT as a liquidity? So we can do that. You only supply your fractionalized token. Second is that you leverage your NFT. Just like what you did in Aave and Kuma. Because if you only hold one NFT, when you get 14 Ethereum out, and you can't buy another 8 in the market. So this is the power of fractionalized token. Third, I think it's the most attractive one, short NFT. Some people think NFT is just a scam. So how to use short the NFT? Very easy step. First one, you supply stablecoin. Of course, we can supply the Kuma that stablecoin. Yes, we can collaboration, right? Second, you can borrow fractionalized NFT. Third, you swap it to the stablecoin again. So this is another way to short an NFT in the money market. In Furion, we only have one click button to do that. You can decide your leverage. So this is what our competitive advantage. And more is that, especially in the bear markets or when there's a liquidity problems, when in borrow and lending, NFC, Belinda or others protocol will always face a serious liquidation problem. But in Furion, the Ethereum or the token we need to liquidate is not that huge. We don't no longer use one piece of NFT. We can 10% of the NFT value, 20% of the NFT value. Yes, so we can increase the liquidity or solve the crash in the NFT market. So in order to have a more stable borrow and lending, we have AMM model. Uniswap V2, very easy to understand. So the first purpose is to facilitate the liquidation. The second purpose is to facilitate to the user who don't have much money, right? This is not everyone can afford a 100K, come on. And the third one is about to increase the trading efficiency. In the past, we trade in the open sea. Now, we trade in the bird. How about we trade in the Furion? So the third product is, I think it's our ultimate goal is a derivative NFT casino. How to do that? It's easy, come on. We have fractionalized token to form a pool, just like GLP, right? And then users can make use of the pool to long and short the NFT. So, but maybe you're curious, why we don't do that in the money market? Money market short functions is only in short term, because for the current demand, this is the user, we need to educate the users. The users don't know NFT derivative much. They only know, wow, if I hold NFT and I can deposit and do whatever. So the market need to improve. Even GMX just is a huge growth in the last year. So NFT market need more time for derivative. So we will develop the money market first and then to the derivative. So this is an easy revenue model. When you store, lock, swap, borrow and lending, trading free, yes, use ES model to distribute. And the one is different is with others model is the multiplier. When you supply the LP AMM model, you will get more multiplier. So this is how we incent to the users.
Nice, Timmy. I'll give you 1 minute to wrap up.
We will have the second testnet and mainnet next month. And then we are fundraising, and this is the third one. And so if you have any NFT resources or interest in Furion, please connect me. And these are an investor board. Yes. So NFT is just a beginning stage. This has a huge goal in the NFTFi area. So please know. So if you are still interested and want to discuss, please find me. Thank you.
Thank you. Thank you so much. Anyone from the audience got any questions? For Furion or NFT relevant questions?
Yeah, that's pretty interesting. So wanted to understand one quick thing on the whole mechanism behind it, right? So if I hold a Bored Ape and I go and lend it out, so I get a fractionalized token, right? Now, this is kind of indirectly enabling liquidity and also going to be enabling arbitrage opportunities, right?
Yes.
So how do you manage that imbalance between the floor price of the NFT versus the floor price of the token per NFT?
You mean the floor price and NFT and a fractionalized token, the price, right?
Right. Like how many tokens do I get per, say, BAYC? So there would be some arbitrage opportunities there, right?
Yes. So arbitrage opportunity is great. This make the price become normal. So in our protocol, we have factors called minimum threshold, which means the LP AMM put at least 10 NFT and to form it. So this will have at most 5% slippage. Under these situations, people can fractionalize the whole piece or buy 1,000 fractional token to convert to the NFT and to sell in Bird or what. And this is an arbitrage. So we can make sure of this. So before we start the LP, we'll make sure we have the minimum threshold pool. Yes.
And how do you guys decide which collections would be lendable on? I mean,
so in the futures, I believe NFTFi is more diverse. And so at first we will have to design some blue chip, but later, after the money market is more mature, we have different tiers. Oh, and I will just reference as another DeFi protocol called Earner, just be hacked 200 million. That's one. Just if isolate the weight. So we will do the blue chip first. Yes. But in the future, of course, we can do a lot of NFT, maybe backed by the government bonds.
It's pretty interesting. Thanks. Yeah.
How do you go about like your pricing sources? Where do you capture that info from? Is it a mixture of like open APIs, or like how are you basically pricing essentially how are you utilizing the prices to be able to fractionalize the NFTs?
You mean the price of the fractionalized token? Yeah. So as I mentioned before, always have arbitrary opportunity. If we do have arbitrary opportunity, then the price will be back to the normal. And before we have arbitrary opportunity, we make sure have minimal thresholds. So of course, we will find the market maker to do that. Yes.
But the floor price of the NFTs, where are you sourcing that information?
Oh, the floor price is about Bird, OpenSea, and the exchange.
Okay.
Definitely.
Okay.
Great. Thank you. Thank you, Furion. Thank you, Timmy. Actually, that concludes the first half of the day. Sorry, I have been a very bad person and asking you to keep quiet and not talk. But now feel free to chat and mingle. And also the lunch will be ready very soon. So please enjoy the mingling. Thank you so much. And we'll come back in like 1 hour or half an hour, depends. So feel free to stay here and check around. There's very nice areas, cafes nearby. Thank you.
Doing good?
Good afternoon, everyone. We're about to start the second half of the day in 5 minutes. So feel free to wrap up and then come on to the front and get seated. Thank you.
So where is the Wakalah? Okay, nice.
Yeah, nice to see you in person. Yeah, Belinda told me about this.
Hola. Hello, everyone. Please get seated. If you're not seated, please remain quiet. So we're happy to start the second half of the day. And we'll have 5 projects demoing, and then we'll have 2 fireside chats and then 1 panel about regulations. So first of all, we'll have Wakalah team to present. The mic is yours.
Hello. My name's Terrence, here alongside my co-founders, Patricia and Seraphim. And we're the founders of Wakalah. It's a MENA-focused DeFi ecosystem and layer 2. We're excited to introduce you guys to what we're working on. So what is Wakalah? Wakalah in Arabic translates to an agent, a third-party trusted individual that facilitates transactions in Islamic finance that wouldn't otherwise be possible without an agent in place to ensure mutual benefit. Wakalah is the Web3 equivalent of this, a layer 2 to facilitate crypto transactions between MENA users while also catering to the broader DeFi landscape. So Wakalah is based on the premise that the potential for growth is unmatched in the MENA region. Not only as the fastest crypto adopter, but also the most attractive regulatory environment for innovation. So you can see some stats on Middle East, North Africa, kind of outpacing everywhere else in the world. The growth so far, however, is largely plays out on centralized exchanges, with DeFi landscape being largely underserved. So most MENA users kind of left in the dark around improper framing, around the nature of DeFi in terms of how halal, Sharia compatible it actually is. Wakalah network itself is a EVM compatible layer 2 with a native protocol ecosystem featuring exotic MENA assets and regionally backed stablecoin. So we can dive a little bit more into the infrastructure of things.
Hey guys, how's it going? Yeah, my background is I used to trade emerging market bonds and effects before going to crypto. So I was quite excited about the project because I really wanted to build a perp exchange that's really efficient, where you can trade all sorts of things beyond what you have now in DeFi. And that's how this thing got started, basically. On the infrastructure side, it's pretty straightforward. We wanted to get for something reliable that can support lots of activity without blowing up. So we're probably going to go for something like OP or Arbitrum Stack after discussing this with our lead dev. But it's more about the product side of things, really. So if you can go to the next slide. Yeah, so in terms of stablecoins, this conversation really started when BUSD got whacked by American authorities. We realized you cannot really build in DeFi if you're exposed to that jurisdiction too much. So the idea was to build a stablecoin backed by OSDs and by regional debt, essentially. I know there's some people here doing that already, so it's a pretty viable concept. At the same time, it has to be capital efficient and liquid, which is why you need to have liquid assets like OSDs backing it. And because of regulatory clarity, you can basically give back the yield without being afraid of getting absolutely whacked by regulators. So that's a way to bootstrap liquidity straight away. Kind of similar to what Frax did with 2-token Frax system, but you would have a stable coin essentially. Yeah. And this is what I'm personally really excited about. So again, it's my background, so I kind of like perps, obviously, but I think it's also go-to-market strategy. People here love trading oil, nat gas, effects. Bringing these markets to DeFi is a way to attract retail users over the next 5 to 10 years. In the process of doing so, these people realize you can actually trade crypto and discover the DeFi ecosystem from within, while attracting people from CT, from crypto at the moment, because the product's good, right? I think one thing about infrastructure I forgot to add about is there's lots of value trapped by MEV actually. Like you could substantially increase yields if you were to give back MEV rewards essentially on the layer 2 level. So a smart contract that collects the cash and be able to get it for an OSD structure would basically boost organic yield, not bullshit kind of tokens, but actual ETH yields, which further attracts liquidity initially. So that's a way to bootstrap the entire ecosystem with organic yields, good products. Next slide. Oh yeah, the wallet is down the line, basically a gateway for retail within the region to access the ecosystem, to access dApps that we think are best suited for them, the stablecoin, the perp exchange, etc. Remittance market is actually a huge market, so if we can tap even into a fraction of that, you essentially get constant flows, sticky flows from retail over the next year. So yeah.
And also on the Wakalah network, there's going to be an NFT marketplace. And one of our go-to-market strategies besides the product part is the NFT go-to-markets. And so for the people that here that already know us, we're pretty well connected on CT. And we already formed a lot of partnerships with the NFT blue chips, such as the WASIs, such as the Anatas collections and etc. So if you like Anatas, you will love like Saudi Anatas, and if you like Bored Apes collections NFTs, you would love like Saudi Bored Apes. And we plan to use like the NFT marketplace and this kind of localized NFT collections to basically bridge, bringing on board the retails in the region, and also at the same time bring on board CTU into the narrative.
This is the roadmap. On the technical side of things, like we said, we're going with the OP stack so we can implement things pretty swiftly. Plan to be at testnet in around a month and a half. And from there, we can start working on stablecoin deployment and those perps that we would like to onboard and explore. So hopefully we can reach mainnet sometimes by 2024, start of 2024, maybe Q4 2023. Yeah, our team is super DeFi native. We've got a ton of great experience across very major DeFi protocols between Euler, Olympus, SSD, working really closely with Delegate Cash on the NFT side of things, as well as Equilibria Labs, who built Perennial Perp Exchange. Seraphim's also got a super extensive TradFi background at Goldman Sachs, and we've got a deep technical team that helped build out Base and had a background at BlockSec doing security audits. So that's us. That's Wakalah. Love to talk some more. You can reach us on Telegram. Just give us a shout. And yeah, thank you.
Thank you so much, Wakalah team. And any questions from our VC judges? Kalan.
Hey guys. Yeah, so we met yesterday. So I know about the project already. So it's a pretty interesting play on Islamic finance. But one thing after the pitch I wanted to check with you is that, are you targeting the DeFi side of things by building your own L2, or are you targeting the NFT community because your go-to-market said you want to do NFT and then bring the people? So are you DeFi focused or NFT kind of a play for?
I think it depends if you ask me or Pat, really. So it would be probably two different projects. On the DeFi side, my answer is oil, nat gas, and FX perps is essentially the go-to-market, pretty much. If you ask Pat, she's going to work in parallel on the NFT side, so she can talk about that. But these two projects could work in parallel, really.
So yeah, basically what I think of it is the cultural aspects and also the DeFi aspects, also like for the institutions. So institutions, they would love to trade like perps, they would love to just like chase after the yields and getting like liquidities. But for the cultural side, it's also targeting like the both regions as well. It's like a cultural merge, like Wakalah is the central point where the two cultures meet. Like currently there's a lot of like NFT volumes coming from the region, and also outside of the regions, there are like Clone X, for example, have a lot of holders within the MENA regions. And we do plan to just like issue like sub collections, as I just mentioned before, to basically bring like the two communities together. I think that's the go-to-market for the NFT, basically. But DJs will be DJs, they'll be chasing up the yield and it's just trading perps, pretty much.
Yeah, basically the exposure inside the Middle East, North Africa right now is almost exclusively NFTs because of that lack of clarity around how halal DeFi is in the current state. So we can kind of tap into the regional users in terms of bridging them over to Wakalah through NFT exclusive collections, and then tap into the CT native, DeFi crowd by offering exotic assets, perps on chain.
So how does it become Sharia compatible here?
So it's a front-end mission. In practice, Islamic finance and conventional finance are very similar. Largely, we have to reframe things around P&L sharing, the presentation of opportunity, making sure both parties are mutually benefiting from agreements, kind of the way Wakalah operates and ensuring both parties are getting a good deal. Wakalah does that through front end.
Yeah, and also it's about transparency and making sure that everybody's getting a good deal, which seems to be an important tenet in Islamic finance. If you look at DeFi, you could even argue it's pretty halal to begin with, especially if you give back as much yield as you can through MEV rewards, through stablecoin yields.
Yeah, but why build a chain? Why not just build a dApp and do the same thing that you would do without the chain?
Yeah, I think Terence can talk more about the narrative. My kind of more product view is the MEV rewards is a way to, if you generate activity there and you give that back, there's a substantial yield to be attracted, basically, if you do a node so specifically. But there's a bigger narrative too.
Done. Thanks.
Yeah, redistributing that yield is also almost like a form of purification across the chain, kind of redistributing those fees. So yeah.
On the narrative wise, so Wakalah basically means agent in Arabic. And it's basically pretty much like a semi-isolated environment where there was a native like DeFi native protocol ecosystems that's framed on the front ends, like basically make everything like more Sharia compatible. So that's like a environment where we want to onboard the MENA regions and also make them being able to counter trade the entire like global like city space, I would say.
Awesome. Thank you, Wakalah team, for the great presentation. Awesome. Yeah. Halas. Halas. Yeah. Thank you. Thank you. Next, we will have Vyper team, the DEX for structured products.
Yeah.
Hello. So we have been hearing about perpetuals, and now I come on stage and I have to convince you to trade options as structured products. So I'm gonna try to make it. But first, the presenter. Perfect, it works. So hi everyone, I'm Alberto from Vyper Protocol. Just flew in from Italy this morning for this presentation. So let's start with a very simple question to break the ice. So what all these 5 trades have in common? So we have 5 derivatives: large cap, altcoin, event market, pre-listing, and FX. So 5 very different products, all being powered by Vyper and being traded on Vyper in the last couple of months. So let's start from the fact. So if we look at the FTX at the peak, they had 400 different derivatives which were listed. So if we look at DeFi today, the top protocol offer just 15 of them. And if we, for comparison, look at a spot, we have venues like Binance or FTX at the time with a couple of thousand coins. But when we come on chain, we have Uniswap, which is leading with 150,000 different pairs. And actually this number is true. I couldn't believe it myself as well, but I triple checked it yesterday, like on Dune, and it's right. So what this tell us is that people is never going to be tired of more selections. And this is very true when it comes to derivatives. So what is Vyper? So Vyper is essentially the everything store for derivatives. We have been building around 3 main pillars. One is the protocol, open source, permissionless. Everyone can now build any type of on-chain derivative in a matter of minutes. Then we have the product. So what did we build on top of Vyper? So we built a decentralized exchange for derivatives and structured products so that we can give you leverage on any type of assets. And the last point is like the innovation that we bring to the market. So essentially we build Vyper with a very modular infrastructure so that building new type of derivatives, it's very easy and fast. So few words about the traction. We have been live for a couple of months, and actually the best signal of people liking our products is just one. They have been trading constantly different markets. So in the last couple of months, we have seen more than 5,000 trades which have been done and interest across pretty much all the space. So integration with other protocols which want to build on top of us. Then we got support from We got support from players like Binance, BNB Chain, Serum, and Wormhole. So we win 2 of their hackathons. And we have some pilots which are lined up with some leading market making firms for 2023. So at the end of the day, I strongly believe that is the people behind the technology that can shape the future. And I'm super happy to introduce you today, our full team. Yes, we're just like Infor. So we are a founders only team, very lean. The 4 of us are actually all Italians. And if you are paying attention at the surname, you will see that we also have 2 brothers in the team. So we have been knowing each other for actually 8 years, and we've been in the crypto space since 10 years. So yeah, we have seen like a lot of things happen in the last couple of years. So we came back building full-time Vyper at the beginning of 2022. And actually, we feel that we can bring our experience in TradFi and in tech for companies like Amazon, JP Morgan. Maybe we should not mention Credit Suisse these days, but I mean, whatever. And yeah, so I mean, we came back because we feel that we have the tools and the knowledge to essentially bridge the big gap that is existing today between these two worlds. So Vyper is a plug and play platform which allow you to create, trade, and settle any type of on-chain derivative. And it's built around 4 building blocks, which are flexible payoff, unlimited asset, custom collateral, and any duration. So essentially, if we leave out, the IFC today and we go like to our bank or to our private banker and we ask them to structure whatever product, they will come with a very wide offering. While if we go on crypto, we see the tendency to see one protocol, one product. Maybe it's one protocol, 2 products, but not that much. And we want to change that. So shipping products is our edge. And actually, we have been doing so constantly. So in the last couple of months, we have been shipping already 3 different type of markets: vanilla option, which we all of options, and forward. For very different trading altcoins, we have been trading stocks, FX, commodities. We have been trading also something which was not live yet. It was the case in November with with Aptos, and it will be the case in a couple of hours with Arbitrum. And we are going to list the first pre-market essentially token. So why are we betting on derivatives? Well, the answer, it's simple, because we think that derivatives are like a better way to trade. So if you look at the derivatives in detail, they are the only type of financial instruments that in one trade, they can offer you 3 different market view. You can have capital protection, you can have income generation, and of course, you can speculate with crazy leverage, which I know that all of you love. So just like some data, because I love the data, the derivatives market is actually in US equity 30 times bigger than the spot. While if we look at crypto, we are like at 1% of the spot. So there is like a huge, huge gap to be filled. So what do we have like in pipeline for the next couple of months? We have very different products. So we have more retail friendly, which, for example, impermanent loss derivatives, so people can LP and provide some capital without having to fear impermanent loss. We have altcoin options, just because people want to trade leverage on that. But we also have more sophisticated products. You can think about barrier options basket or structured products. So this is actually like a quick demo. Okay, nothing much to see here. On the top right, you can start with the app. Of course, you connect your wallet and you can choose the asset type. As you can see on the left, we have like quite a long list of assets. We have established assets. We have more altcoins. The type of this trade, for example, is a digital options, also known as binary. You can think of it as a lottery ticket. You put $1. If the price is above the strike price, you get $2 in just 10 minutes. So yeah, this is like the asset selection. Then we have the actual trading, which is where the magic happens. And actually the magic is not the connection to the wallet. So how it works is that essentially you set your parameters. In this case, it's really simple: up or down, you choose the leverage, and then you hit on refresh price. Okay, here we have like a little explainer. You can take a look at the chart. Our technical analysis friends, they would see that this is like a double shoulder clearly going down. So we go down with $1.5. We max the leverage out because we are degen. We refresh the price. This is where the magic happens. When you refresh the price, you are pulling into our hybrid RFQ system. So what this means is that we pull into different sources of liquidity, because RFQ stands for request for quote. So you signal your intention to the market of wanting to buy $1 of these type of options. So we stream the price through different players, market makers, AMM pools, individual liquidity providers. We fetch the best price for you, we return it back, and we guarantee to you that price for 15 seconds. So once that price it's guaranteed, then you have no slippage, no MEV, and no fraud. So okay, this is just like the P&L.
I'll give you 30 seconds to wrap up.
Okay, this is like the P&L, nothing much to see. We go fast. This is like another product that we did, like a put option on Credit Suisse. This is our liquidity. Essentially, we are capital efficient and we have more safety and we have deep liquidity. And since we are like in a rush, the fee, you all know, is like an exchange. So we can get trading fees. Okay, something which I'm super proud like to share is that Vyper can also be used with an institutional setup where essentially you use the chain as a settlement layer.
Awesome. Thank you, Alberto. That's a great presentation. I'm actually a lot more lenient in the afternoon round because I think more our audience want to hear the project to talk more. Just some quick small request favor. People from the back, please keep your voice low for our presenter. Thank you. Thank you. All right. Any good questions from our audience? So, Alex.
Great presentation. So you mentioned that the protocol is like fully permissionless, right? If I understand correctly, this is options or perpetuals or both or mixture.
Yeah, that's a very good point. So as of now, we are supporting pretty much every type of options. So like from vanilla, digital, and even more complex like payoff. We are not going into the perpetuals market, even though like it's something that, you know, we could do just because like we feel that there are like a lot of other teams which are working on that. What we have, which is like very similar for perpetuals, because of course the problem like of perpetuals is that you need like a lot of liquidity to spin up the market. It's a forward contract. So essentially like it's the same type of instruments, but you can just run it with much less liquidity. And just to give you like a hint is what we are going to use it like in a couple of days to launch the Arbitrum derivatives market. So the ARB airdrop. So we're going to allow people to speculate on what's going to be the price in 7 days when they release the token. But since we don't have enough liquidity to spin up a perpetual market, we do it with a forward.
And just one more, who is primarily the target audience of this protocol? Is it mainly institutions or is it like retail?
So for the on-chain part, we see that like in the short term, the market is really focused on on retail and, you know, like DeFi users. We see like some good potential working with this strategic partner, which is also like a holder of the VAR license to explore the institutional space. But that is going to be more as a settlement layer, as in you don't put the money like on chain, but you use the blockchain to record essentially the back office system of a derivatives exchange.
Hey, great presentation. I had a question mainly from the maker side. So the market makers provide these RFQ quotes and they take the other side to the users trading. How do you manage the settlement of these options? Do the market makers have to custody funds with you when these when these options are settled, they're presumably cash settled. Do they have to custody funds with you? And how do you determine how much if these options have unbounded payoffs?
Yes, that's a very good point, and that's a very interesting question. So for the market makers, how we are working is that at the moment that you trade, the capital is segregated right into the smart contract. So let's say that, you know, we do like an option, I go long, you go short, I put $10 and you have to put like $100 of collateral because you're like the seller. So what we do is that we take these $10 and these $100 and we lock them like inside the smart contract. So as of now, it's like fully collateralized. But of course, like it's not the greatest, like in terms of capital efficiency. So we are working like on 2 solutions to do that. So one, of course, like is netting the position. Because you're a market trader, you're taking, you know, all the flow and you have some positions which are netting out. And the second one is that we want to have, and this is where like our tokens comes into, is that we want to have like a mechanism which is very similar to how the Chicago Mercantile Exchange like it's working. So you have the concept like of seats, and essentially if you buy like a seat, for example, you can trade, you know, with 50% less collateral. And also what we want to do is that we want to disclose the counterparty so that, you know, it's up to the trader to choose whether they want to trade fully collateralized or if they're up to take. Of course, like the level like of collateral will also like impact on the price, but at the end of the day, like it's all a balance between risk and security.
And just to follow up on that, in the event where the market maker becomes insolvent with you, what happens to the user's trade?
Yeah, that's a very good point. So with the current model, it cannot become insolvent because the money is locked in the contract and it's fully collateralized. So if we run with a model like of board seats, essentially where we are, you know, providing less collateral than the capital, so we will have to set up like an insurance fund. So that, I mean, essentially we have, you know, the value of the seat that they purchase, which can then be resold and can cover the loss. But that is a little bit more down the line.
Awesome. Good questions and good answers.
Thank you, guys.
Thank you so much, Alberto. And also Alberto actually, yeah, Alberto flew in from Italy for the event. Thank you so much. And he's moving to Dubai. A lot of projects are moving to Dubai. Next, we'll have Ilya from Plasma. Let's give Ilya a round of applause.
Yeah. Yeah, guys. Wow. I'm Ilya. Glad to be here and see you today. Great day. So many people, VCs and cool projects. So yeah, I'm the Ilya. I'm the CEO and the founder of Plasma Labs. I'm established this company in 2017 and we're still in the market. So the Plasma Labs itself, it's positioned as a global Web3 ecosystem. We're building and solving a real Web3 problem with our products. And my first question to the audience, like, who is really using the DeFi these days? Can you raise your hands? Who is in the DeFi, guys? Not much yet. Yeah, not much. But who is believe that DeFi is the future of a fintech, of the banking? I think, yeah, more people believe it. So the big problem of the Web3 now and DeFi is adoption, right? Like 5 or 6 years ago, the problem was an adoption of Bitcoin or cryptocurrency, and now is a DeFi. But DeFi is more and more complicated than just the crypto, with all these like complicated protocols that we've seen today. So our goal as the Plasma Labs is to build ecosystem with very simple and beautiful user experience in the Web3, and aggregate mostly all DeFi protocols under one brand, under one platform, and as I said, provide a very simple access. So this day we already have many protocols and projects. As I said, we've already 6 years in the market and we are a profitable company. Our last raise was 3 years ago at $3 million. And yeah, so let's start with like just the basic problems of decentralized finance. After this FTX crash and many other stuff, so people start understanding then even using the crypto on the biggest centralized exchange is not safe. So the major problem now is, for me, is the privacy of in the centralized finance, and the second problem is the security of your capital. So that's where the DeFi come into the game. But the DeFi still is not perfect. So DeFi is very like is a lot of complexity. Even if you use a DeFi, probably you use a PancakeSwap or Uniswap. And even if you go on the Aave or Compound, it will become for you very, very complex to use it. And if we go deeper, if we go to the derivative, if we go to real world asset tokenization, perpetual exchange, so much stuff, and it's so complicated right now. A very bad user experience, UI and UX. And finally, there is no almost education for DeFi. It's just a few like YouTubers who do a really deep research on different protocols, but it's still not making people use it. So with our platform and our protocols, we're trying to use most of this problem. And how we're gonna do it. So first of all, we're building a big Web3 ecosystem of protocols in every niche, trying to improve user experience and make it like more beautiful to people to use this DeFi protocols similar to what they use in Web2 or in their banking services. We've built a beautiful platform that called Plasma.finance. So please just visit it and check. And also we have our wallet, that's a Plasma wallet. That's a non-custodial wallet for DeFi and Web3. Yeah, so we're also trying to solve the liquidity problem because the DeFi now is very cross-chain and multi-chain. We have 30, 40 different EVM chains, and liquidity is spread across all these EVM chains. So with our like bridge protocols and DEX protocols, we try to aggregate all this liquidity to provide for user a very like simple user experience in trading cross-chain their asset. We also integrate many different protocols. We've integrated in our DEX aggregator around 80 different DEXs. We aggregated bridges in almost all popular bridges in the market. And finally, we want to build the like one-stop shop solution in Web3. So anyone who is building the protocols, we are happy to discuss kind of integration, because right now the whole DeFi is just a lot of small building blocks or puzzles, and the Plasma want to build the whole picture. And our final stage will be next year. We plan to launch the L2 ZK EVM on the Ethereum, and the major like the killing feature of this L2 will be the gasless transaction. We are one of the first team who's building the gas station. That's an infrastructure that allow you to make transactions without paying the gas fee and without even having a native token. And we integrate this gas station inside our L2 solution. So it will be almost like native solution without any gas, and you can use any protocol on it as you want. Yeah, and our solution right now, even right now, looks more like a decentralized Binance. You have a lot of different protocols and features, and it's all decentralized, non-custodial, and permissionless. We are growing very fast. So we started building these platforms 3 years ago, and now every month we deploying new protocol on new product, and all of that we're releasing on our Twitter. So please follow us. It's 0x Plasma. And that's a whole ecosystem scheme. That's the different levels of applications. So that's major part. That's our protocols. You can see that we are trying to kind of disrupt every niche in Web3, and our team is has ability to do it. So we've already delivered a few very powerful protocol, and this year we also will launch the Perpetual Exchange, our bridge infrastructure, and NFT infrastructure. So yeah, that's a road ahead for this year. And also for those who invest in the projects and in the tokens, or for the projects who creating the tokens, we also make some innovation in the space that we called on-chain theft. So please, if you'd like to know more, that's actually the really smart contracts that allow for the investors to set up the ROI target. There is no sell pressure to the market. It's packed inside the NFT, so it can be sold on the secondary market, and there is a lot of benefit for the both sides, for the projects and for the investors. It's also just a small piece and protocol inside our big platform. So that's addressable market in terms of different areas that we try to cover with our protocols, with our aggregation. That's the biggest player now in this field. So you can see that, yeah, and also many of this protocol don't have any kind of token utility. That's mostly all the tokens is a governance token, and the capitalization of many of these protocols doesn't doesn't show the real volume or traction as a protocol itself. So on our level, we try and also to connect the tokenomics of different protocols with a revenue flow from these protocols still staying in the utility legal space. I think many of you seen this picture. This from A6 in depth. That's a picture of how they predict the growth of the users in the Web3. So you see that they comparing it with internet users back to 2000, yeah, in 1990s. So my prediction that we come up to the 1 billion users much faster. Like you see the ChatGPT today get almost a few million people just in a few days. And I think the proper Web3, the beautiful Web3, the smart user experience will help us to achieve it 2 times faster. So yeah, and the goal is to build a company. We're already profitable company, but we want to build a company with a 20 billion capitalization that can serve 1 billion users in the next 5 years. So thank you very much, and please welcome your question.
Thank you, Ilya. Great presentation. Awesome. Any questions from our VC panels? Does it work?
Hello. Yeah. I think it works. Yeah, okay. Thanks for the presentation.
You're welcome.
Wanted to understand, do you want to be an aggregator company or you want to be a protocol infrastructure company?
Yeah, so we start like a company that want to aggregate the market. So we start from the aggregation DEXs, bridges, and etc. But when you start aggregating, you understand that the projects and protocols on the market, they not really match to each other. It's hard to aggregate. Every protocol has its own interface. So while you're aggregating all these protocols, you need to build your own infrastructure that actually connected to all different protocols, and not only aggregating them like a DEX, for example, like a liquidity. It's also allow us to build a new models of the like DeFi products. For example, when we aggregate and connecting the lending protocols with the DEX protocols, we creating a like kind of new protocol that's called the margin trading on the DEXs. And you can look at this as a building blocks. So the DeFi as a building blocks, like Money Liga. So when you're trying to aggregate all that, you're actually building the protocol on top of it that helping you automate also different processes. So yes, we are aggregating and the building protocols, and every protocol has its own tokenomic and financial model.
Awesome.
And what you've been building for the last 3 years, I believe.
Yeah.
So what's the DAU and the MEU of the platform at the moment?
I can't publicly call any numbers, so we can, yeah.
Five figures, 6 figures,
Private.
any range that how much is the active users in a range, not a specific number.
Yeah, as I said, I can say any numbers publicly.
That's fine, no problem.
Okay.
Yep.
Awesome. Before the next question, I would like to ask our lovely audience here to keep your voice low and remind also friends next to you to keep quiet. Thank you.
Any more questions about the future of DeFi? Okay, guys.
Okay,
Thank you very much.
Yeah, for the great presentation.
My contacts, just write me on the Telegram. Thank you.
Thank you. Thank you. Next, we'll have Fuji Finance, also who just come from the airport, right? Nice. Okay, the stage is yours.
Hello, hello. Before I get started, let's do something really quick. If you can hear me, clap once. If you can hear me, clap 2 times. If you can hear me, clap 3 times. All right, there we go. Hello, everybody. My name is Mark Anstead. I'm here with the Fuji Finance team, and happy to talk to you about how we are enabling you to borrow, build, earn, and climb with Fuji. So a little bit about us. We are building the first cross-chain money market aggregator. So this protocol, it analyzes all of the borrow and lend terms on all different kinds of money markets to provide you with the user or as a developer with the best rates. So when you're using this type of solution, you're going to be able to save time and money when you're taking out DeFi loans or just going into depositing into a money market. So some of the things that we are looking to do with this specific solution, we are helping to optimize interest rates. So you as a user, you don't have to go and look at all of these different types of money markets to figure out what is the best one for you. We do that for you automatically. And since all of these different types of money markets, there's new money markets deploying constantly. There's new L2s and L1s that are constantly deploying. Frankly, like we're going to see dozens and dozens of L2s being deployed. We just saw Coinbase announce that they're going to be launching Base Chain, and there's going to be a whole bunch of new money markets deployed there. So all of this liquidity, it's being fragmented. And with a solution like Fuji, we're able to help unify the access to this type of liquidity. And one of the things that we're actually doing is we are working on building a framework for risk with money markets. Right now, when you're interacting with a money market, there is no risk framework. It's just basically you can go and deploy money.
1 second, sorry to interrupt. I have audience who tell me they cannot hear the presenter. So please, people in the back, pay respect to the presenter and also the audience who want to hear the pitch. Thank you. Sorry.
Thank you. So we are essentially helping to give risk parameters when you're interacting with a money market. So for example, like Aave, Compound, those are the most mature. They have the most TVL. They're known to be very trustless and secure, whereas some other money markets may not have those same risk parameters. And one of the things that we are doing automatically is rebalancing your position. So if there's a disparity in the market, we are going to automatically rebalance your position. So if there's another money market giving you a better deposit rate, so better yield on your deposit, or there's a better borrow rate on another money market, we're able to help arbitrage that position to give you the best rates possible. And while we're doing this, obviously we're doing some different types of cross-chain operations. We're able to do all of this in one click. It's actually down from like upwards of like 9 or 10. It's kind of a little bit complex when you're doing some of these operations. So for anybody here, who here has actually participated in a hackathon by a raise of hands? Yeah, we got some developers in here. I like to see it. So Fuji was actually created in a hackathon in early 2021. It was an ETH Global Hackathon, and this is where Fuji was born. We built the first borrowing aggregator on Ethereum. And then later that year, our V1 was launched on mainnet. It's actually been live for just under 2 years. And this past year, believe it or not, we participated in another hackathon, as you guessed it. And we actually built the first cross-chain debt teleporter. So we were able to take a position on Aave on chain A and take that debt position and teleport it to an Aave position on chain B. And that essentially inspired what we are building with our V2, which is the first cross-chain money market aggregator, which we are calling Himalaya. With this solution, you can deposit, borrow, and repay your position from any chain. We are optimizing your yield and on-chain debt. So as I mentioned, if there's a disparity in the market, we automatically rebalance your position for you. You're able to build custom strategies as a developer. So not only is this a DeFi product, but we're also building infrastructure for the ecosystem as a whole. There's a whole bunch of other things that we actually allow you to do, like leverage, self-paying loans, and we're also looking into cross-chain yield aggregation as well.
Thank you.
So how does this actually work? You guys are probably wondering, okay, this is kind of cool. So how does this operate behind the scenes? So we were building using ERC 4626. It is the vault standard. So it makes it very easy for us to actually go and integrate with new money markets. It allows you as a user or as a developer to customize how you want these vaults to operate. So if you want to harvest things and basically take these harvested liquidity rewards and reinvest them, you can. Also, for the cross-chain operations, we are using Connects. We are building on top of their Amarok upgrade. So this allows us to do all these types of operations in one click. For example, you can go and deposit onto Arbitrum, take out a loan, bridge it onto Optimism, and that can all be done in one transaction. So with our go-to-market strategy, we are a team of builders. So step one is integrating with all different kinds of money markets and networks. With this V2 launch, the private beta is actually going to be going live very shortly. We are supporting, I think, like 25 to 30 different markets on 6 different chains. And we really want to collaborate and build with these teams. We want to support them. We actually saw one of our partners, one of the money markets we're actually supporting here, and it's lovely to see them and build around them and support them. Some of the other things that we were doing is NFT gamification and educational content. We love to help educate. And down the line, we're focusing on how we can help to build solutions that will build our TVL, or grow our TVL, I should say, and grow our user base. So some examples of that are migration tools. We're going to be working with Aave and Compound to build out solutions for them and ourselves. And looking to integrate with different types of wallets and DeFi portfolio management dashboards. And later on, we want to allow for developers to go and build their own custom strategies on top of this engine. So you guys are probably wondering, okay, this is kind of cool. So how do you generate revenue? Number one, so if you have a loan taken out and your collateral drops, we are able to take 10% of that collateral as revenue if it ends up getting liquidated. Number two is around operations for both deposit vaults and borrow vaults. So we don't really take that much money for that. We just charge 10 basis points for it. It's just for the operations. If you as a user or developer want to go and build your own infrastructure to do that, you're more than welcome to. But we just make it easy and automate all those things for you. In addition to that, some of the other things that we have built is the ability to flash close a position. So for example, if you've taken out a loan, you have your funds locked up in a, let's say like a vested staking platform, and your collateral starting to drop, you're starting to freak out and you're like, oh crap, I don't want to get liquidated. You can use a solution like a flash close where you'll automatically close out your position and save your collateral. We also enable for liquidation protection. So it's similar to like a soft liquidation. So obviously you don't have to get liquidated. We don't want you to have to get liquidated. We also enable for debt chain migration. So similar to what I mentioned, how we're going to be building around solutions for Aave and Compound, and enabling for collateral and debt swaps. These are some of our revenue projections, some of our metrics. So we, as I mentioned, we have been around for about 2 years. For our V1 that we launched, we had a cap on deposits and borrows. You can only deposit and borrow up to 2 ETH. And we had a lot of users who wanted to play around with our product, which is great to see. We had about 1,500 users on mainnet. We had about 5,000 on Arbitrum, and we had a couple thousand on Phantom as well. So this is our development roadmap. As I mentioned, we're about to go live with our private beta for our V2, which will support borrowing vaults shortly after, enabling for lending vaults, our public V2 launch, this migration tool that we have been working on, and a few things that we're going to be working on later this year that we're very excited about. We're actually going to be enabling for cross-chain flash loans. We'll be the first team doing that. That's a part of what we built with our V2, which will be pretty cool. These are some of our integration partners, and these are some of our investors. Some of our core team, we have Dagaro, Boyan, and myself. We are raising as we are here. And thank you. I know I was getting close to on time. So
thank you, Mark. Thank you, Mark. Great presentation. Any questions? Yeah, from our audience. Hi, everyone else, please remain quiet. Thank you.
Yes, thank you for the presentation. Could you tell me more about this teleport technology? So you're kind of using the same mechanism like distributing the earnings for other wallets, but you do it cross-chain, or how you teleporting between chains this?
Sure. So during the hackathon project, I'll actually flip back to the slide because I actually think the picture is from there. Here we go. So the picture on the right-hand side, if you actually want to go and look up the presentation for that hackathon project, it was called Flown. We built it at ETH Amsterdam. And this allows you to do a teleportation from one chain to the next. So what we're doing is we are building on top of Connext for this. They have this thing, it's called a nested call. So it allows us to take a position on one chain. We're essentially bridging this asset using the liquidity on Connext and opening up the chain or opening up the position on the second chain and essentially closing that with a nested call loop.
So actually it's kind of on the back end, it's bridging.
Yes, that is correct. So for the user on the front end, they don't really see or experience any of these things. They just kind of click a button and it migrates over for them and they're kind of good to go.
Thank you.
No problem.
Awesome.
Hey, Mark, great presentation. So love the implementation of 4626 and love Connext as well. Wanted to understand, recently there's been like a huge flaw in 4626 through Open Zeppelin, right? With the possibility of front running an MEV. So have you guys tackled that, or have you been able to even identify that issue?
Could you repeat the question again for me?
Yeah, sure. So with ERC 4626, there's been a recent identification of a potential MEV and front running with integrations. So have you guys found a way to figure this out, or you guys are anti-MEV already? You have a protection layer for users.
So I do know, I actually don't know offhand if that's something that we have in our V2.
Right.
I do know that we had some issues on our V1 with MEV on liquidations. I know that aspect has been, there is a solution for that in our V2, but for that specific one, I do not know offhand.
That's fine. And just last one on that. So you have smart rebalancing, right?
Yes, that's
And
correct.
So that's great. And what about portfolio management? That the 4626 also enables portfolio management. So are you going to have that in the future, or is it still part of the plan with the current release?
Yeah. So one of the things that we do want to do with as a part of 4626 and what it can do, we want to allow for like how these vaults are customized later down the line. So in our development roadmap, we allow for people to have permissionless vault creation, so they can go and build their own strategies as well. So like if you want to go and support XYZ money market on just a few specific chains, you can, and you can customize how you want the vault to operate. Because let's say, for example, you're depositing onto Aave on Polygon, you can go and receive Matic rewards. You might not want to harvest those and reinvest them. You might just want to receive those as rewards. So you can customize how you want that to operate, or you can say, I want this to go and automatically repay my loan that I've taken out. So I'm harvesting it, selling it, and repaying the loan. So it's essentially like a self-repaying loan, similar to like Alchemix.
Great presentation, and good to see you again. So currently right now, the teleport, or at least the bridging, is heavily reliant on connects.
That's
correct. Do you guys have any plans to, I guess, expand beyond that so that connects doesn't become the only solution that you guys use to do the teleportation?
Sure. So as of right now, we are building on top of Connects. That is our main focus for our bridge. The reason why I should mention why we're building on Connects. They have the reason why we're doing it is it's their Amarok upgrade. They support something that's known as canonical bridges. So the way that their bridge mechanism works is it uses the hub and spoke model. So when you're doing like a message, you're going from, let's say, Arbitrum to Optimism. You're going and using the canonical bridge, so the native bridge of Arbitrum, and you're going from Arbitrum back to Ethereum and from Ethereum to Optimism. So it's the most trust minimized bridge out there currently. But with our vision and what we want to do, we don't want to be reliant on them. We want to support other bridges, other liquidity layers, and messaging solutions, because we want developers to be able to customize, or even users to customize how they want it to operate. Because we're just trying to be a tool and an engine for people to build on and leverage. So looking to build on support for like for dBridge, Axelar, Layer 0, a variety of different solutions. And then you as a user or developer can customize how you want that to operate.
Awesome. Thank you for the great questions and answers. Thank you, Fuji Finance. And don't take away the remote, please. I'm kidding. Next, we'll have OrbofiAI. It's a AI factory for Web3. Let's see what Orbofi has to go. A round of applause, everybody.
All right. I think, first of all, okay, so there are a lot of people here, but who has actually generated AI content already? From Midjourney, Stable Diffusion, who has done? Like, raise your hand. All right, cool. Okay, so we have a few people. So in a nutshell, so that's actually what we built. So we custom fine-tune our own model, but mostly as being the factory for Web3 and games.
Good.
So first thing first, I would have loved to demo the application live. We already have about 22,000 users already. We actually launched 1 month ago. And even as of now, about 4 million AI images have been viewed and created by people. So we're growing actually really quickly. There we go. Yeah, so in a nutshell, when we look about content, so here we're going to move away a little bit from DeFi. When we look at content and online communities, just like the internet, content is king. And within the next 5 years, we won't be surprised if 50% of the content that we see online is actually AI generated. Even profile images, even the images that you see on Tinder, on LinkedIn, whatever social network, 50% of those will be AI generated. So in a nutshell, Orbofi is becoming the main factory engine for all AI content. Of course, here, we want to make sure that it is tokenized on chain, but we want to go way beyond just asset factories. But our long-term bold vision is that we want people to create full-blown virtual worlds and full-blown asset factories in a few seconds, which in a nutshell will be revolutionizing gamified experiences and in a nutshell, internet experiences. of course, all using our AI models. Yeah, so our team, so we're about a team of 11. We're all literally spread out around the globe. My co-founder is from Ubisoft, and pretty much we're just like a team of developers here. You look some of our advisors, like some of the heavyweights in the gaming industry, actually, and you see some of our partners already here. Okay, cool. So why now? You know, why AI generated content? Literally, it is the fastest growing content creation vertical that the world has witnessed in the past 2 or 3 years. It is growing exponentially, and that's why we are positioning ourselves as being one of the main factories and one of the main engines. And we do expect by the end of this year, there will be about 340 million users utilizing AI-generated content and throughout different tools. And even out of next year, at least 1 billion people. So it's going really fast. And even as of now, there are about 20 million assets created daily, and is growing day after day. Back to the problem, right? So as of now, there are a lot of tools to create content, but yet there's no way for all these people to actually monetize their content and monetize their AI models and what we call factories. And that's actually what we come in. You know, one place where you can search, create AI-generated assets, gaming and media assets, as well as create your own models in a few clicks. So standalone fine-tuned models. Anyone with a phone, and start creating your own content. Yeah, so that's part of the main problems here. You know, it takes way too long to create an AI asset, to create like an image or like a gaming asset, about 1 month to 2 months. And it's actually, we reduced that to about 2 seconds. No way to monetize. This is an amazing opportunity that we grasp here, and we're already pioneering the space. And in a bit, we're gonna talk about why on-chain and why blockchain-based systems. And here, just to make sure that there is an automatic and just like trustless monetization system for these creators, and just like, again, anyone with a phone. And the last thing, there's actually one feature that we're releasing soon, is that there's no way to co-create with people, with strangers, with friends, how we can combine imagination and incentivize imagination creation here. Yeah, so part of the solution, we'd love you guys to check it out, OrbofiAI.com. It's already live. So number one, of course, part of the search engine. It is as powerful as Pinterest search engine. You can go compare, and we use our own AI models to really power a very seamless experience here. And as you can see here, you can try really complicated keywords. Our engine would always provide exactly what you're looking for, and you can just like keep going as at a proper and a beautiful rabbit hole. And yeah, we love to shout out on Pinterest. We just built something better at this when it comes to the engine. So that's number one, right? Search, just to enable and to bootstrap the network with content. Second thing is, of course, text to image. You know, you type in a few texts of a few pieces of words, few text, and it generates content for you. The other thing is, of course, image to image. You know, you input an image and it will generate multiple variations of a single asset. And this is mainly used by game developers. You know, it is a $180 billion market. They spend a lot of time trying to create these assets, spend a lot of resources. Here they can do it in literally 2-3 seconds without paying anything compared to what they used to pay. The other thing is what we call, again, creating AI models that we call internally factories, virtual goods factories. And you can literally go over any kind of digital content online. Here I gave the example of some certain game assets, but it could be for marketing assets, logos, web design, anything that is digitally can be manufactured, something like that, and produced and distributed. And it's all going to be powered on OrbofiAI. Yeah, so some of the current tractions, as you see here, so number of the assets viewed, some of our users, so we have to update that. We're actually growing really fast. And basically where we think we're going to end up at the end of 2020. If we look at our trajectory, we might end up at least with 1 million users by the end of this year. And the reason why is that there's like a lot of people experimenting with AI content. Yeah, so in a nutshell, these are the markets that we are tackling. As I've mentioned, so the gaming market is about $190 billion market. And that's the main one that will be revolutionized by AI engines. There we go. Yes, I've mentioned about the AI market being our first one. Okay, quick question. Who actually recognizes this guy? Cool. Danny Trejo. You guys know Danny Trejo? No? We got two. Fair enough. Okay, cool. So basically, we are working with Danny Trejo, and he's a Hollywood actor, and he's done Machete. So we own the license, and he's going to be one of the first ones we will create for a branded factory for branded Danny Trejo characters. So we'll get a lot of visibility through him, and we'll hear a lot. Also want to, of course, we are also targeting consumers. So we both monetize in both fiat and crypto via regular subscriptions, because a lot of even our current users are Web2 people. They just want to pay with fiat, pay with the credit cards, and subscribe and create content. But at the same time, we want to make sure that we tap into crypto users so they can pay with crypto. And so far in ETH, BNB, and Polygon and Matic, because we're deployed on Polygon and BNB chain. Yeah, so some of the go-to-market strategies. So the first one I've mentioned here, Danny Trejo and a bunch of other celebrities that are in the pipeline. Triller is a $5 billion company. We've actually partnered with them about a month ago, and we built a 3D space for them using AI for the NBA All-Star game that happened a month ago. We have a full-blown network of celebrities that we will be leveraging properly. So each one AI-generated content. And you'll see here some of the other verticals here, but we want to go full blown in Asia. You know, the biggest market for virtual goods is down there in Asia. So I want to make sure that we are well heard of down there and well utilized. At least in the Web3 space, to be the most advanced AI engine out there. It's very, very hard to replicate what we have. We spent months building the infrastructure underlying our AI as well coming up, but yet there is no way where you can create and sell and monetize not just your assets, but as well your factories and your AI models in the same place. There we go. So some of the roadmap, we have a detailed roadmap. We're actually releasing our API soon so that also developers can utilize it, integrate our engine in their applications or any kind of use case. Yeah, so we do also like raising our seed round here. We will be closing it at the end of the month. Yeah, so another thing I would love to mention is our text to 3D engine. Going back to what I said in the beginning, building full-blown virtual worlds in seconds requires 3D models and 3D engine, basically text to 3D and image to 3D. So that's actually where we're going. We'll be testing this 3D engine in the next 3 months. So yeah, a lot of cool stuff coming in. We also have our public token sell actually in about 2 months. There we go. So some of the revenue projections. So it's looking good so far. Boom, boom, boom. So the OBI token, as I mentioned, we are releasing our own public token, and we are basically talking with one of the best launch pads out there. It's already confirmed. I do not want to disclose it now, but it's actually coming. Yeah, so as mentioned, we are raising a seed round, 3 million seed round, 30 valuation. We've already closed some. And then, yeah, it's actually looking good. We'll be able to close it at the end of the month. So yeah, so some of our teams, I mentioned, we're very diverse. All of us are developers. And yeah, please do reach out. Go to orbofi.com, create your assets, create your models, share with your friends, and we do some cool stuff. And you will be hearing about us a lot more down the line. Thank you.
Thank you so much for the presentation. Great. Any questions from our VC judge? Please, our friends in the back, please keep your voice down a little bit. Thank you.
Let me follow up with that. All right, guys, people in the back, some people asking questions. If you can calm down, that would be great.
Feel free to move to the front as well. This is the last project of the, actually, yeah, Shard Dubai for this edition. Yeah.
Thanks, man, for the presentation. So, one of the challenges that media companies have today with content AI is they don't know what's the source and the copyright behind that image that you take from the database. So how do you find that as a problem, and how do you tackle that?
Absolutely, for sure. And especially and that's one of the challenges. The reason why is that we enable people to create their own models. For these models to be trained, they require some data. They might go to ArtStation, Pinterest, on Google. So there is definitely a lot of issues around copywriting. You know, when we look at even GPT-4, there's a lot of controversy around it. What is the data that has been trained on? So that's something that the AI industry will keep coping with. Like personally, like we train our own model, like we're using our own data, but utilizing on other AI generated content. So that's how we train our model, like basically synthetic images. But it is an issue, like in the overall space.
Yeah, because your business model is heavily dependent on the AI aspect, right? And if there's no copyright licensing and there's no, like, it's a complete gray area right now, it just becomes a bit challenging. And you mentioned you're launching a token and you have a SaaS model as well on the side. You're targeting Web 2 versus Web 3. Why do you want to have a token in this? Like, why not just have a SaaS model even for Web 3 people and they pay in crypto instead of being in fiat?
Absolutely. So we actually have a couple revenue model, which is a SaaS, regular SaaS, and there are one where they can utilize to pay with crypto, to pay for compute credits. That's what they need to create images. So if they want to subscribe with fiat, they can do that. But at the same time, they will still need, we're going to basically give them some of our tokens, but they need the token to create assets. And if they want to create a standalone model, they'll need the token. And that's how they can monetize. So let's say you create your own factory around interior design, right? Or any like characters or anything. The way you monetize and you receive your fee is through our token. So that, yeah. So in a nutshell, yeah.
You're going to incentivize creators to come and build and create images for someone else to use. That is the SaaS customer. Got it. Okay.
Yeah, correct.
Sounds
Yeah.
good.
But in a nutshell, is that why the token is that when we look at the overall content production and like AI content production and distribution, there needs to be a currency that governs the whole thing, especially when there is a marketplace, because people will be buying and selling AI content and buying and selling AI model. So there needs to be a one currency that governs and powers that economy. And that's where the OBI token comes in. Yeah. Yeah.
Got it. Thank you.
Awesome.
Any other question? We're good? All right.
Yeah, we're good. Thank you so much for the presentation. Thank you. All right, so that's actually all for the project side. So we have 10 projects that have finished their demo. Hey, everyone, can you hear me? If you can hear me, please clap 3 times. Thank you. Thank you. All right, so later on, we'll actually have 2 fireside chats. The first fireside chat will be Zhou with Claude from Mimo Labs. And then the second fireside chat will be AJ with LoomDart. So the topic is first RWA, real world asset, and then NFTFi. And the third panel, the second panel we have is about regulation. So we'll have our 3 presenters as well on the stage. And before that, we would love to, later on we'll basically invite our VC judge to pick their top number 3, and then we'll share them on the screen, the top number 3 projects. So we will actually just get started with the project picking. So we would like to ask our VC judge your top 3 for the project for today. So maybe we can start with Alex. Yes. So publicly, he has to say what 3 project that he likes the best, and we will type on the stage.
The 3 I liked was Fuji Finance.
Fuji Finance. That's Alex pick.
Phaver.
Phaver.
And Mimo Capital.
Mimo Capital. Kuma. Right. Thank you, Alex. Zhou.
Yeah, the order doesn't matter, but I like also the Fuji Finance, Phaver, and OrbofiAI.
OrbofiAI, the last one. Awesome. Thank you, Zhou. Kalan.
Yeah, so for me, no, not in any sequence though, but for sure, FujiFi, big market, great implementation of 4626, a lot of potential to grow. And the second one is ZKX. I think they've built some interesting mechanism changes that could be.
What's the first one?
Fuji
Finance.
Yeah, the Himalaya DEX. Yeah. The second one is ZKX. I think a lot of potential with the mechanisms that they've built that can be gone on cross chain. And the third one was OrbofiAI because I'm a bit.
Third one was OrbofiAI. So OrbofiAI got 2.
Thank you.
All right, thank you, Clan. We'll pass the mic to Juliet. Let's pass the mic to Juliet. Hello, everyone. Please keep your voice down a little bit. Thank you.
So luckily, I've got an opportunity to interview a few projects before. So my choice is not that sophisticated. So I'm voting for Phaver.
Phaver.
Yeah, and then Fuji Finance and ZKX.
Fuji Finance and ZKX. Okay, thank you, Juliet. Let's see, where are our VC judges? Oh, never. They're hiding in the corner.
I really enjoyed the Vyper one, Fuji, and OrbofiAI.
Vyper, Fuji, and OrbofiAI. Great. Who else is our VC judge? Good stuff. So it's actually very hard because there's some even ones. So actually, DMCC Crypto Center also sponsored the event by rewarding the first, the top 3 projects liked by the audience. So the first one getting a whole year of free registration and setup in DMCC Crypto Center. Second place got 70% off, and third place get 50% off. So we would like to ask the audience if you would like to voice your opinion. What's your top 3? Anyone want to share your top 3? Who has been here the whole event, throughout the whole event? Alice?
Mimo Capital.
Mimo Capital.
And Phaver.
Phaver.
Fuji Finance.
Fuji Finance. Wow, Fuji Finance. Good job. Gajenda? Awesome. Who else want to share their top number 3? Let's pick 2 more. Who else want to share their top number 3? Let's see. Who has been? You have been here throughout the whole event, right? Huh? Have you? Do you want to share your top 3?
I prefer not to.
Thank you, Alex. Okay, let's see if we got. Okay, then the winners will be Fuji Finance, Phaver, and OrbofiAI. Thank you so much. All right, let's take a 5-minute break, and then we'll have our fireside chat, 5 to 10 minutes. Now you can talk as loud as possible. Thank you, everyone. Another 30 minutes. Yeah. Okay. Yeah. So go to the end of.
Belinda, the panel was scheduled to be now.
Oh no, because I factoring also the traffic. I'm factoring the traffic as well.
Yeah. Belinda already shared these questions. Oh, actually, I totally forgot this question. Oh, I can send it to you. I don't believe we don't either. Yeah. Maybe we can.
I'm thinking, should we do? Everyone.
What do you mean by like so? What's the
So the thing, given the real yield is what we call the yield that is not based on the sale of foreign tokens.
Hey everyone. Since you are been hanging around here for the whole day, let's take a photo here at the stage, and then we can move on with the fireside chats. Shall we? Thank you. Please move on to the stage. Move on to the stage. Hi guys. Let's move on to the stage for a quick photo. Let's move on to the stage for a quick photo. Let's move. Hey guys, let's move on to the stage for a quick photo. Hey guys. Thank you for coming. Let's move on to the stage. The stage for a quick photo. Hey guys, let's move on to the stage for a quick photo. Yeah, join us. Hello guys, thank you for coming. Let's move on stage for a quick photo, for a group photo. Thank you. Hello everyone. Hey guys, let's move on to the stage for a quick photo. Yeah, let's move on stage for a quick group photo. Stage for a quick photo. Hey guys, please. Hi guys, the group photo is for everyone. We'd love to have you on the stage. Thank you for hanging around for such a long time. Please move on to the stage. Hey guys. Everyone.
You guys all look super happy. You guys just cheers. Go.
Can we show Sharding? His Highness Sheikh Mohammed love this gesture. We can do this together for him. Yeah. Because he wants to be special. Yes, yes. You can see this sign in front of Emirates Tower, actually. Yeah. Yalla, guys. Yalla. Thank you, everyone. Okay, we have 2 fireside chats and 1 panel, so we will get it started.
Now that we're back in Dubai, like I actually didn't know what to move here. Now we see each other more often because of the same circle. But he's super busy. Support trade. Tough job. RWAs around. Yeah, yeah. Yeah.
Belinda. Belinda. You still close mic.
It's back. Thank you.
Shall we start?
I think so.
Okay.
Good.
Okay. So thank you, everyone, Belinda, for this opportunity. Today, we're going to have two slide chat. The first one is about real world assets. That's something that we talked about a little bit earlier. So we like to elaborate a little bit more. First of all, I like to introduce myself first and then go to Cloud. Hi, I'm a Zhou Takayama from Japan. I am an angel investor. And also I run a crypto channel in YouTube. That's the biggest channel in Japan. And I support promotion, market acquisition for the projects that I invest in. Thank you. And I pass it to Cloud. Please introduce yourself briefly. Thank you.
Hey, I'm Claude, CEO at Mimo Capital. We're doing quite a few things that we had the opportunity to talk to you about earlier. And our current focus is tokenization of real world assets. So yeah, very happy to talk about that. We love the area and we believe it could be one of the biggest legs in crypto moving forward. So let's go.
Thank you. So, okay, let's get started. The first question is what's the real world assets? In a simple language, maybe someone already heard of this, but someone not. But if you put it in a simple terms, can you explain?
Yeah. Well, real world assets could mean like anything. So I think it needs a little bit of context to make sense for a 5-year-old. Real world assets only make sense in the context of crypto, as in, because it's a difference from crypto native assets. Like everything on crypto was coming from crypto. We're talking Bitcoin, Ethereum, and everything like crypto native things, crypto native tokens, and real world assets are just crypto elements that are representation of things from the real world. So this is like what we call real world assets. The biggest and the most common real world asset that we know on crypto is the USD stablecoin. So USDT, USDC are actually the first real world assets. So everybody in the room has been using real world assets for a long time. It's just that now we're going to have more of them.
Thank you. You already briefly touched on the what kind of real world asset is available. But I want to go to the next question is there are many real world asset properties already. Can you I want to let's put it this way. What do you think about the key for the real world asset to be mass adoption, for the mass adoption?
So I think before we can even talk about mass adoption, we have to talk about some form of adoption. Right. Like most real world asset companies in crypto have had very little adoption, like in the previous run in 2017, the 2018 and all that. It's the first thing that was missing, in my opinion, was DeFi. Like, if you are looking at how real world assets are moving in the real world, you have a whole lot of financial infrastructure. And before DeFi, there was not much financial infrastructure in crypto. So you had all these assets that had no infrastructure to be stored, no infrastructure to move, no infrastructure to get borrowed against. To me, that's the first leg to form any form of adoption. And the second would be the second leg of failure for real world assets before is lack of liquidity. And I would say some simple primitive that everybody can understand. So, I mean, everybody that does real world assets keeps talking about real estate. I think this is something that's going to be tried by different companies every other year, because this is something very easy to understand for a lot of people. So maybe when you have something that everybody can understand paired with good DeFi, you can have a boom for real world assets, but not before. And that's only for the first layer of adoption. Then if we talk mass adoption, you're going to need a third layer that would be consumer apps, properly retail things that are essentially pushing that. But before you have any form of any form of thing that everybody can relate to and a very simple types of assets with good financial infrastructure, we're not going to see much adoption. This is where I join what the panelists have said this morning. Outside of that, like, I think we're good. Like the regulation used to be the bottleneck. It's not anymore. You have more and more proper frameworks. Then, like, I mean, outside of America, of course, like the US is still a place where regulatory landscape is very uncertain for real world assets. But you know, the US is not the entire world. So I think we can get to mass adoption before the US gets a proper framework.
As a builder's perspective, what's the challenge of like developing real world asset related like project?
So, I mean, based on what I just mentioned of what is needed to like bring real world assets on chain, you need people who understand the regulatory space, people who understand tech in general that can build good software, and then people who understand DeFi, because those real world assets will likely move on DeFi. The reason why being that CeFi will have like a fear of real world assets in general, because it looks like securities, and securities are scary for CeFi. So it's going to be mostly like teams that understand DeFi, then teams that have good tech, and teams that understand regulatory space. So as builders, you need people who have all those skills in the same room. And this is, like, in my opinion, the most difficult part.
Thank you. And also another question, you touched upon liquidity. To secure liquidity, what's the things that you can do or you want to do?
I mean, everybody will have different ways of solving liquidity. Let's look at how do people outside of RWA are looking at liquidity. You have, like, on the DeFi plays, liquidity incentives. You have like the liquidity mining and stuff like that, where you essentially pay people to act as market makers. And in the CeFi, and I would say more like a centralized exchange play, you have market makers and huge exchanges with order books and all that. Exchanges and order books have been a very efficient liquidity model that has been providing liquidity to tons of tokens. However, it's not applicable to real world assets because centralized exchanges are not going to list those things. So you're going to need different strategies for that. Like at Kuma, we have picked a strategy of turning things into stable coins, but this is not the only one. I'm fairly confident that everybody's going to have their own. The guys at Fuji Finance have used like a clone of Compound, for example, to try to liquefy their assets. And I'm fairly confident, again, like a lot of companies in the RWA world, thanks to how developed is the DeFi infrastructure today, are going to come with good things. I mean, let's be honest, today, like adding liquidity to a token is like much cheaper and much more efficient than, say, 3 years ago, because of the likes of Aave, the likes of Curve, things like that. Like, there are very efficient software, and this is not stopping. Like UniV3 proved that you can have like, a different and efficient DeFi liquidity models, and those things are growing. So I think RWA that are able to use DeFi primitives the best are going to have the most liquidity, but it's going to be about understanding DeFi.
Understood. I want to add one more thing. I think yesterday, the CEO of BlackRock, Larry Fink, was talking about real world assets, and then US banking system or the US market is very lagging in the segment. And if the banking system implement real world assets or tokenization of securities or real estate, probably, they can operate their banking system much more efficiently and productively. And now in Brazil or some other East Asian countries, they're already implementing those technologies into their banking system or payment system, so that they're even now beyond the US. And this is happening not just in the, like Dubai or the US, but also it's happening something that we don't really see, but it's quite interesting topic. So I really wanted to, elaborate more. And then the next question is, I want to go to the real yield, something that we kind of talked about beforehand. Is there anything that you can add from the real aid perspective on the real world assets?
Yeah, I think it's this is a good thing. Like DeFi in general has been gradually shifting from emission-based yield to real yield during the last wave of, at least I would say, the last part of the cycle, because naturally when the price of governance token or anything resulting from emission started to go down, the only things that we're paying were things that were deriving from real yield. And the real yield model is like inherently more sustainable. Unfortunately, it's also more difficult to pump, like because it's real. It's not like based on like some form of emission and inflation. So the concept of real yield makes a lot of sense to anybody using DeFi. Now, what does RWA play with that? Well, if you're talking about the type of like securities that are paying, such as debt, like real world debt, then you have something that is not exactly like the real yield in DeFi, but it's not emission-based yield. You have something in the middle that can add to real yield, because what is considered real yield are generally protocol fees. So you would have yield for DeFi users that is not coming from protocol fees, but it is still sustainable. And I think like real world asset could be a very good addition to real yield in DeFi, because that would be a sustainable one.
Thank you. I think it's kind of funny that we talk about real yield, because it's normal that we share the revenue out of our protocol, and then if we talk about real yield, that's the important factor of DeFi protocol or something like that. People haven't realized what the Ponzi scheme really is, or they don't even care about where the yield is coming from.
Yeah.
And then they got really totally like ripped off.
That's a thing. Like a lot of people, and I think the collapse of Silicon Valley Bank this week and the collapse of some protocols before that has the same root. People either decide to ignore where the yield is coming from, or just like have no idea. They just wouldn't know. They just don't look better. They see a big number, they put the money in and call it a day. And then when it goes down, they go and complain. It's unfortunate. It means that we didn't do our job educating users as an industry, but I think it's happening. Like people are getting smarter by the day. It's just that it's not everybody getting smarter. It's like every time a little bit of people, a little bit. Eventually, we're gonna have people who are like knowledgeable about what the Ponzi scheme is and what real yield is. Like if nobody's paying and that one guy is paying and he's not telling you how, it's very likely that there's something fishy. But people have been ignoring that, because when it's paying, people are just going. Now, like it's cool that the concept of real yield is going, because real yield growing essentially means that people are caring about the source of yield.
Yeah, thank you. And also, I kind of find it's also kind of weird that a lot of educated or sophisticated investors, like some of you here, have also invested in those kind of Ponzi scheme thing. And also we experience all these rug pull, or like not rug pull, but these problematic protocol, but nobody really trying to educate audience or the market or the passion, but they just move on. Yeah. I mean, why is that?
And that's a crazy thing. Like, to be fair, the biggest surprise we have when protocols crash, or where there's money, like a lot of money lost to like those weird schemes, not even only Ponzi schemes, but really like any like I would say questionable economics that is rug pulling people. The biggest surprise is always who is getting wrecked. Like, you would expect that it's a lot of people that do not know better and all that, but it generally is an enormous amount of like pretty sophisticated investors. Like it's weird to say, but when people say that, say Luna was essentially like scamming people and all that, the best answer I could say is that it's written in the white paper how the token will behave if there is no demand for the Luna token. Like it's written that there is an actual loop of the loop to hell. It's really difficult to blame what's happening when it was literally like written on the paper in the documentation, and yet you had a lot of institutional money piling in. I think when we say we have education to provide to users, we are unfortunately talking about users that are already supposedly educated. It's more sad than we think. It's not really that little retail person that has never heard about finance. It's also those big guys that are managing the portfolio for millions of people that are taking those risks because, well, that's the only way to compete and stuff like that. The best education in crypto is always the cold shower, and it kind of sucks that you have to lose like half your friends' money left and right every time there's something bad. But well, they're getting educated little by little.
Yeah. Okay. Then going back to the real world assets, and what's the good way for them or for me to be involved with the real world assets as a beginner, as a newbie?
Well, today, real world assets have very little, I would say very few places where if you're not already inside of DeFi and all that, you can subscribe to. This is one of the things that we're working on personally with Kuma. We're just wanting to make sure that newbies can just onboard like by just buying a token and that's it, you're exposed to real world assets. But when I see things like Goldfinch, or when I see things like essentially what like Kuma does, and when I see different pitches of RWA companies, I'm fairly confident that you will have access to yield of real world assets without any work. Like, for example, we're both like friends of Swissborg, and those guys are naturally going to expose their users to real world assets without any additional work for their users. It's not much that you will have to do some work to get exposed to real world assets in crypto. It's more like companies providing real world asset yield will come to you via the things that you're already using.
Going back to your project, why did you first got interested in real world asset, and why did you want to start your project?
Well, for the real world asset part of what Mimo does, so Kuma, it's pretty straightforward. We were already a stablecoin company focused on Euro stablecoins, and we were seeing that essentially yield in DeFi was not paying much as the prices of emission went down. And in March, exactly a year ago, you had like the Fed that started to announce that they were gonna like raise the rates. From that moment, as a stablecoin company, we're like, we need to make a stablecoin that pays. Like, if the rates are going up, it makes no sense that people are not getting paid for that when they're in crypto. Like, we saw it as an opportunity to make like to give to people in crypto an unfair advantage to people outside of crypto. We wanted to make like, you know, today you want to be exposed to the bonds, you need to have like some broker somewhere, you need to like go through savings accounts and things that are like somewhat cumbersome to a lot of people. We're like, well, why don't we give access to that to the people who are already in the world that we know, that we're building? So the whole goal was just to make stable coins that pay.
Thank you. And then in real world asset, maybe other project, is there any other projects that you are interested in or you find it's interesting other than your project?
Of course. I think like if we're in the concept of tokenizing real world assets, you have the opportunity to have like a lot of categories of real world assets, like not only like T-bills, like we're saying and all that. And I think the projects that I'm interested in general would be focused on corporate debt. What the guys at Goldfinch are doing, in my opinion, is pretty interesting. They're focusing on emerging countries' debt. And when you see that, you're like, well, maybe you can like, you know, kill two birds with one stone. You would have like the provide yield to users and help people in places where essentially there is some need for help. And this is at least their business model, which I think is cool, because the whole concept of like debt in emerging markets is that it costs very little to someone in a developed country to help like a lot somebody in a developing country. So you were like, well, this guy is raising for, I don't know, opening a shop. It's going to cost him 20K, and 20K doesn't represent much to somebody in New York. And they're trying to match those things together. And this guy is going to be able to give you a massive return. Of course, like, even though I find this project very interesting, I know that it's going to come with a lot of problems, mostly like default or Forex and stuff like that. But at least it's a very interesting idea, in my opinion, because it's trying to bridge what crypto has been trying to sell us since the beginning, currencies that can make the world better. And I'm like, well, yeah, if those guys manage to be successful, maybe we will have made the world better. So that's a good thing. This is the type of project that I'm very curious about.
Okay. I think some of you may already saw or heard of this news came out yesterday. And some of the DGens, they just been buying tokenized diamonds because the diamonds are kind of, what is it called, uncorrelated to the stock market or Bitcoin, so that it's a good asset to invest in. And some people say real world asset is kind of too early, but some forms already well accepted for DGens or some other people in this industry. How long more do we have? Is it almost done?
Yeah, I mean, in what you're mentioning about like, I think what you're mentioning about like assets that are decorrelated from the crypto world, I think it's a very fair point about why real world assets would make sense and why there will be demand. You want to have something that is somewhat uncorrelated to the rest of your portfolio. And in crypto, if you're building any form of crypto portfolio, all your assets were just going up together, except for stable coins. Now, like if you can have different types of assets, you can start to make like more balanced portfolio, and real world assets could be one of the first classes of assets in crypto that allows people to have more reasonable portfolio management.
Thank you.
Awesome.
Thank you so much, Belinda.
Thank you, guys.
Thank you. Thank you, everyone. Any questions about RWA from the audience? Stefan, go ahead.
Oh, thanks.
Yes, sorry.
Yeah. Yeah, thank you. I was curious about, do you see the,
You use this one.
okay. Do you see the future where we have marketplaces for example, real estate, which work like, I don't know, Zillow or something like that, but the assets are fractionalized and it's NFT kind of assets. Like, if you see that future, how far are we from that point of time when it's possible to buy a piece of like 2% of real estate in Dubai, in Tokyo, and so on and so forth?
Okay, so to your question about tokenized real estate and will there be a good market? There could be. It's just that it's going to be much more difficult than for other categories of real world assets. First is about property rights. Like if you want to enforce ownership of things like a home, like real estate, depending on the jurisdiction where those assets are owned, you might be, it might just be impossible to do it. We will need an evolution of a regulatory framework on more crypto level, like we have already, but the second on this type of assets, like every type of assets we want to tokenize will need to have, well, a framework of ownership that is like compatible with this type of thing. Like when you want to exchange a house, it's like slightly more difficult than just like giving a diamond to this guy. Like you would actually need like some person that comes and signs and this and that, like, and it needs to be enforceable in court and all these things. To this day, it's not really easy. Will it happen? I think so. When is more of a relevant question, and I think we're looking at least a couple years before we have something that makes sense. Because if something happens before that, it's going to be so difficult to enforce that we're probably going to see a massive piece of problem. Like some people that will have some tokens, somebody that steals the property, and then like it will realize in court that the ownership was not real or something like that. I think we will need like a little bit of evolution before we see something happening, but it will happen at some point because crypto just reduces friction, and like money has a tendency to go where the friction is the lowest. So as long as there's no regulatory barriers money will flow towards the lower friction. Way on chain will help.
Thank you.
Awesome, awesome, good stuff.
I want to add just one thing. Like Claude said, I think it's really difficult but then the cash flow, the rights to receive the cash flow is going to be tokenized, possibly. That is going to be the case, I believe.
Yeah, thank you.
Like so something just like to go back to the question, you would see like a company owning a lot of real estate, like borrowing a lot of debt, tokenizing the debt from that company and turning the benefits from the real estate and the cash flow into some like interest on the bond, or even tokenizing dividends from a company owning real estate. Could be much simpler, but you would have more of an ETF model. It would be indirect exposure to real estate, which is not the type of thing that you were mentioning, like owning a little part of a house in Dubai or something. This is like way further away, I think. We're going to go through financial instruments before we're going to go through actual real estate.
Yeah, thank you, guys.
Awesome. This is very great fireside chat. Let's give the round of applause to Claude and Zhou for being a great. Good job. Next, great. Thank you so much. Next, we'll have Loom Dart and AJ talking about NFTFi, another very trendy topic. So let's give Loom Dart and AJ a round of applause. Thank you, everyone. Another mic? Where's another mic? Oh, it's here.
Hello.
Great. Stage is yours.
Check. Hello. Awesome.
Look at that.
It's me.
That's you.
That's you, sir. Why are we looking separate ways? Sad.
Sorry?
Should we looking at each other?
Yeah. We're having a moment here while you guys get drinks, but let's get started. I'm AJ, and I'm gonna host this fireside chat with Loom Dart. Awesome guy, legendary guy, and we're gonna get started right now. So yeah, go ahead and get your drinks, and then have a seat here for this fireside chat. But anyways, how you doing today? How are you?
I'm wonderful, sir. Just been enjoying this lovely demo day set up by Belinda and Sharding Capital.
Very nice, very nice. Let's get some more audio for him. Like higher. Yeah, that's a good mic check.
Yeah.
Perfect.
Hello. There we are.
Okay. All right. So here we go. Let's go. So basically, I want to talk about today. We're talking about NFTFi and just how we see where the market is today with this, the need for NFTFi, and just your thoughts on that in general. But first, I was trying to let people get back here. But first, let's give us a background about yourself, Loom Dart.
So gosh, I've been effectively a crypto native since I was like 15 years old. I discovered Dogecoin in 2014, and I've kind of just been like very, very full-time crypto ever since. I've tried to keep it relatively where I was not like tied down to any one zone. So I've honestly almost done everything, although I skipped out on most of GameFi because I just didn't really understand how it works. But yeah, I've been mostly just trading derivatives. I'm partner at a VC firm called Ego Capital. The name's pretty memey, but it's a good fund. And kind of just really kept to myself, didn't do too much till about 2021, where I kind of discovered NFTs and was like, well, I mean, when you've been in crypto for a very, very long time, you tend to see a lot of things, and it inherently builds up this level of cynicism towards where it's like, all right, so they're going to put this on the blockchain, that on the blockchain. Does it really need to be on the blockchain? But kind of, I discovered NFTs and I was like, we finally have something that like fundamentally is much more useful to have on a like decentralized ledger that anyone can access than a kind of private secluded MySQL database. And I think like NFTs were one of the first things that came out of crypto, but like truly transcend crypto and are much more than just like a crypto thing. And so I've just been basically full-time NFTs ever since.
What year was that when you started? And what year did you drop your NFT?
We did the Lunark NFT and BuyWasi's drop in late 2021. And good timing and bad timing. I learned a lot about NFTs and kind of honestly about how NFTs markets work in terms of like NFTFi, what NFTFi can bring and what it can't bring, and what like kind of I feel like the scene in general is going into this relatively dangerous, murky waters in terms of like NFT financialization. And yeah, I've just been working on it ever since.
Very nice. I hope that gave you a little bit of background. A little bit of background about myself. I worked for Tesla Solar doing solar panels in the state of California. And then after that, I got into Web3, lost some money in crypto, and then became erratic about learning. And I went crazy on Twitter and Twitter Spaces just to learn. And then found myself around a bunch of degens and NFT projects, and then became a Twitter Space host. And then, yeah, the rest is history. So I do want to say real quick, thank you to Belinda, Sharding Capital for a beautiful event. And then now I want to go into NFTFi and ask you a couple of questions. Well, first, what is your overall vision of NFTs and NFTFi and the projects within the next 1 to 3 years?
So I think this is a very interesting question to answer, because it's like asking me to define what I view NFTs as, what like an NFT can be. And I think Claude and Zhou did such a good job kind of explaining real world assets. The link between NFTs and real world assets is like, it's not something I'm going to really cover for this fireside, because I think you just basically take everything they said, add NFT to it, and it's kind of the same fireside. But I want to focus this on kind of the predominant use case for NFTs now, which is like Bored Apes, CryptoPunks, which is effectively a Web3 identity. You know, it's like each individual Bored Ape has its own persona, its own, like it's someone, it's their way of being represented on the internet. And I think this idea of being able to create communities and groups I think for a while it's going to stay in crypto. Eventually it will branch out to like communities and groups outside of crypto. For now, it's a very crypto thing. And I think this ability for these guys to band together and form groups on these kind of like assets and identities is by far one of the strongest selling points of NFTs. And I think that's still, for at least the next few years, until the lawyers and the real world asset guys kind of stop fighting each other, that's going to remain the like predominant NFT use case. And I think this kind of NFTFi scene has gone a bit twisted in a way to where early 2021, everyone in the NFT scene was incredibly happy with everything. Everything was about collecting, you know, it was like, hey, buy one so you can take part in the group, the community, because, for example, it's like, hey, you know, the CyberKongs have an amazing alpha channel, you know, it's a community that you wanted to buy this access token to, because then you get to meet all of these cool guys. And I think this is something that like, so the original reason I even got into NFTs was because after COVID hit, the internet and the world in general kind of, it got a bit more secluded. People got a bit more to this point where it's like, no one was kind of as friendly. More people turned to these isolationary lifestyles, sticking to predominantly using the internet. And in that scene, it's like, so let's say you're not an internet native, you haven't been on the internet, Twitter much at all, and you're like, hey, how do I like talk to people here? I don't know anyone. It's a bit scary. And like the first reason I really fell in love with NFTs is because it kind of came to me that like, look at these random guys who have like almost nothing in common except they share the same NFT PFP. And this is something that's literally bringing them together. They're talking to each other, and kind of the ability of an NFT community to be that like, I mean, it's very hard to talk to someone you don't have any like, who you don't really know much about. But if you know they're part of the same community as you, it's like, hey, yeah, look at your NFT, look at my NFT. You can talk about it. And it like really helps build out this community.
Okay, I have a quick question too. That was good stuff. Okay. Tell me the pros and tell me the cons of NFTFi.
So Unfortunately, the early 2021 WAGMI vibes turned.
Hold on 1 second. Hey guys, there's a lot of noise back there. We have the legend Loom Dart. That would be awesome if we listen in. So I would appreciate that. Thank you. Go ahead.
Oh, I appreciate it. Well, I mean, so kind of the issue with NFTs is, in my eyes, it's a kind of asset that's like a luxury good. It's like a Bugatti Veyron, right? You want everyone that owns a Bugatti to be driving the Bugatti and showing off the Bugatti, because that's how you build brand value. I mean, for lack of a better term, that's how you flex. And so kind of this changed in NFTs, where people started turning much more into hoarders, into like, wow, this asset was up 50x. If I buy 100 and it goes up another 50x, I'm going to be very, very rich. And I think the kind of scene turned into this area where instead of people buying for the community, buying for the culture, people were buying for the pure idea of, if I buy this thing, I can sell it for more later. And that kind of changed the overall NFT scene from something that was about joining a community, collecting, into something that was purely speculative. And so to kind of tie this back into NFTFi, the issue with that is NFTs, I mean, until we do the real world asset stuff, but I'm talking about NFTs and kind of the PFP idea here. NFTs intrinsically do not have any kind of underlying fundamental value. There's no like, hey, this asset is backed by this level of earnings per share or this amount of revenues. I mean, it's amazing, because it means everyone that you know that is buying the NFT is buying like one or two, because in their eyes, it's, hey, I want to join this community. I want to own this. Like, I want this to be me, but I understand that I am buying effectively a JPEG, you know. The profile of the buyers is it's who you want. It's the guy who's effectively buying the Bugatti to be the guy who owns a Bugatti and drives a Bugatti. It's not one guy buying 500 Bugattis hoping that others drive Bugattis and like make Bugattis cool. And so in that sense, I think like NFTFi is important in the sense of, I mean, at the end of the day, this is real money. If you have a CryptoPunk, you don't want to be in a position where it's like, hey, I have this asset that means a lot to me, but I fundamentally know that I can't ever sell it because it's me. NFTs are non-fungible. If you sell it to someone, they own the asset. You can't just like buy another CryptoPunk because that's not your CryptoPunk. And I mean, this guy that you sold it to can just charge you like infinite money effectively. And so for NFTs to kind of break free from this idea of like, you know, a bunch of fun guys having fun and being somewhat more of like a legitimate asset, you do need some level of financials that lets you effectively either hedge the exposure of the NFT without liquidating the NFT itself, or get some level of liquidity for the NFT, which is like, you know, hey, I have this CryptoPunk, I can get a good loan at a good LTV. And like, that is very, very important to the overall growth of NFTs in general. It's something they fundamentally need. But I kind of worry with NFTFi where instead of being like, hey, let's facilitate a tool that grows the fundamental intrinsic value, it's much more, and I mean, somewhat rightfully so, because obviously every market that is fueled by speculation is going to be a market that trades the most, that has the most volume, it makes the most money. But it's somewhat extractive in the fact of like, if everyone's trading an NFT to trade an NFT, it's just slowly going to degrade in liquidity and volume as people realize that like, hey, this is just an altcoin with a JPEG now. There's kind of no community left. It's just traders. And unfortunately, traders are guys who are very, very fast money. If a narrative changes, they're just going to leave. And so I kind of worry that like if NFTFi gets way too deep into the financial side of stuff, it can be somewhat self-destructive.
Yeah, but if I could jump in, I think it's going there. People are looking for liquidity. And I would just say a little tip that's not financial advice. If you are looking to take a loan on your NFT, I would look for a platform that does that, where it is based on a stable coin or USDC versus in ETH. Because let's say you take a 10 ETH loan on a Azuki, and then you know what I'm going to say right now, and and ETH is $1,500 right now. Well, what happens when ETH goes back to 4K? You're going to owe a lot more money. So try to find a platform that does it in just on the dollar amount. That would be best. That would be my first non-financial advice tip. Second one, I think that's a little less gray, is the renting side of an NFT, which has to do with IP rights, has to do with, I mean, it's very easy. You just basically, here's my NFT, you want to use it. Will you put it in a smart contract for a duration of time? And then I get it back after that duration of time. It's not that big of a deal. And then you have your terms. So to me, that's very simple, black and white, and very, very easy. But for me, I still firmly believe that we're at a place where people make fun of it, the PFP stage. I think we're still there. I still like that things are being built, but I believe that as long as there's human beings, as long as there's digital identities, we're going to have PFPs. There's a reason why there's this up there. There's a reason why there's a Sappy Seal. There's a reason why that's our guy right there. So Loomdart with the Wassies. So it's digital identity and it's not going anywhere. So the people that are upset that we're just in a PFP age, I would say it's not going anywhere. But it's just in time, more tech will be developed and more solutions will be developed, and it will just expand. You know, we're not going to run around with VR headsets right now. We're not going to be doing all this crazy stuff. I'm not, like you guys can, like, I'm not going to do that. But I will have NFT as my profile picture. And I do, and I'm a Twitter Spaces guy. I recommend, if you want to find out about NFT projects, go on Twitter. They call it crypto Twitter, NFT Twitter. Do it. Like, that's where the information is. You ever been in a Twitter space with him? He will rant for an hour and give you so much valuable information that you've probably never heard of before. You're not going to get that on a YouTube. He's not going to sit there and record himself for 6 hours and put it on a YouTube. No, he'll do it on a Twitter space for his community or a Discord for his community. I would recommend going after these projects and finding out what's under the hood. And then you make a better financial decision on what NFT to buy. We love Azukis. We love all these other projects, but we need to be obviously smart. So I said everything there, not financial advice. That was my little rant right back. But anyways, okay, let's continue. So we talked about NFTFi. I talked about a little bit of the cons and the pros. So now what, man? I talked about community. Let's wrap this up with community, or, you know, going that way. What are your thoughts on the impact of what we're seeing when it comes to NFT projects, community, and why projects actually go up and or down?
Well, I mean, obviously, like you've said, none of this is any level of financial advice, but it's kind of going back to one of my original points, which is just like, if you have people that want to join into a group of other people who are either doing cool stuff in crypto, doing cool stuff in tech, then you have a group of people that is not an exclusive club, but it's like a club people want to join. And I think a lot of projects like late 2021 kind of shifted from the idea and that narrative, because it was like, hey, you know, we need to do metaverse, or like we need to become something that like is a gigantic brand immediately. And I think projects kind of lost what made them really special, which is, you know, it's your NFT holders. It's the guys that are providing community, providing content. It's like no NFT can ever provide, like no NFT team can ever provide a product as good as like many teams can, which you get by having like a really strong community. But actually, like, I think to kind of bring this a bit back into NFTFi, there's one kind of interesting area which is kind of like, all right, so Loom, you don't seem to like NFT financialization, but I mean, so I traded derivatives for many years. Like I came into crypto as mostly a trader. I just kept to myself, didn't have to really talk to anyone, and just like sat in my boxes on BitMEX. And it was great. So like, I understand the heavy financial aspect. And I think to imagine that we will be in a world that is full of heavily digitalized assets and reprimand people from speculating on them is insane because like, well, I mean, you know, people like to make money, and if the asset is hot, the asset is going to make money. And so I think like what we need to start doing is thinking of ways where we can enable people to trade these NFTs, to speculate on these NFTs, and not do that in a way that actually impacts the ability of the people that own the NFTs to use them, to like drive the Bugattis. And I mean, this has been something that's been done in finance for very many, many years. Like the spot gold market is decently well sized, but if you go into derivatives of gold, it's gigantic. And I really think that like derivatives kind of presents this way to get effective, I mean, I don't want to say the lesser of two evils, but allow people to speculate on NFTs, to trade NFTs without much of the kind of negatives of like, hey, these guys are hoarding these assets. They're hoarding the Bugattis to like keep them to themselves and just flip for more money later. And so I think that like, over time, I mean, we're kind of seeing now where a lot of projects that were in this heavily financialized, this is the future, buy 100 because, well, the assumption is another 100 people will eventually buy those from you. Like these projects aren't doing too well, and people are kind of thinking like, hey, where does the value for this stuff come from? Is it is it from the utility or the products produced? And so I think like, well, I mean, NFTs themselves are effectively just 2 years old. I mean, you can go for like, you know, crypto kitties, yada, yada. But in terms of this CryptoPunk Web3 identity, it's about 2 years old. So we are incredibly early in that sense. So it's like, there's stuff to be discovered, but yeah.
Perfect. My thoughts on that is, I mean, if you think about it, NFTFi, if you want to get a loan on your NFT, I mean, you can. Essentially, it's like refinancing your home, right? You have X amount of value in there. You could take a loan on your house and it's completely fine. It's completely, but when it comes to me wanting to do that for an NFT, that like for me, it's a little more risky than a nice plot of land on the beach of California. It's a little bit different. So like, you know, things can go down real fast and it's just extremely volatile. So I would just be smart and be careful if you do that. But I understand it, and it does bring more liquidity, and a lot of people are very bullish on that idea. The founder of Savvy Seals, I asked him this morning what he thought about this. I told him about the conversation. He said he's very bullish on NFTFi, that a lot of liquidity can be brought in from that.
I mean, it just effectively helps make these assets something that like, there are people who would love to have a CryptoPunk and they think the amount of money they're putting into the CryptoPunk is worth it. But it's this concept of like, well, I may at some point need some of that money. And so they're not buying it to sell it higher, but it's like, you know, they need a mature asset that has collateralization options. And I think that aspect of NFTFi is immensely important for the scene to kind of grow into something where we get a lot more people who are comfortable having that like one NFT that is forever them. I mean, in my case, it's WASI 4687, many derivatives. But yeah.
AJ 3919. Okay, so I think we're basically ready to wrap it up. Is there any other final thoughts? Thank you for your time. I don't know if there's any questions we could ask, but or if anyone has any questions, but is there anything, final thoughts that you have? We love you, Belinda. Any final thoughts?
I think I've said it all. If anyone does have any questions, feel free to ask away.
Perfect. Thanks, bro. Thanks, everyone. Thank you.
Thank you, Belinda.
Any questions? No? Any questions for Loomdart?
It's your chance. Also, AJ is a rising star. Awesome.
He's got a question.
Okay, Joe, we have more. There's
Just a quick question, Rimdot. Thank you for this great opportunity first. But I want to ask how do you feel? What do you think when you have your own project and somebody buying your NFT and getting into community, and sometimes you have a meetup and people come to see you, or they enjoy being there with you or with your buddies? How do you feel about this building communities?
I mean, so I think there's like kind of two questions there. Maybe the first is about like being the founder of an NFT project. And I think like the way I treat my project, the way I treat building stuff is I want everything to grow in a way where I am just seen as, I mean, as a community contributor, you know, I am one of the many people doing stuff to greaten the WASI ecosystem, the WASI community. But I mean, like I've been going to crypto meetups since like 2014. Like I had a few friends in London and we just chill and talk crypto for hours in like a random ass kind of Americanized Chinese place. And it was like lovely. And so I think crypto is a very, very growing ecosystem, and there's a lot more people getting into crypto, but it's still rare to be able to just like sit with people, talk with people about crypto in real life. And so I think being able to like, I mean, so every Wednesday or so, we try to host like a WASI meetup in Dubai, and it's like really, really fun to be able to, I mean, kind of just get out of your comfort zone, be relaxed knowing that you're like amongst your peers or amongst your fellow NFT holders, and just talk about like anything. Because like while we are all people in crypto, we're all also doing very, very many different things, but we have this common strand that just lets us connect and talk together and just build really cool stuff.
Awesome. Thank you. You have questions? Okay.
Hey man. Here? Test. All right. Actually, I have a quick question. I would love to know what's the story with the WASIs. Like, you know, the character. I would love to know the story. I know it's been like sort of like your persona online, but I'm curious to know.
This is so anyone that joined crypto after 2019 is incredibly fortunate. Even though this bear market has been incredibly insane, at least it hasn't been dull. The 2018-2019 bear market was like gut-wrenchingly boring. Absolutely nothing went on. There was nothing. The Bitcoin price would move $10 in like a month. Like it was just sideways. There was no news, just nothing really. And so the few of us who were kind of like just crypto degens, you know, when you're full-time crypto, you're full-time crypto. I'm always there. We were just incredibly bored to the point of like delirium. And so there's a wonderful friend called Wasapest who goes by the handle Maru, and like Wasapest into Wassies. So to kind of give the context of what a Wassie is from like the original spawn point, there's a Japanese artist called Tsukino Wagamo who he's honestly very popular in Japan. And he just randomly drew this tiny Wassie doodle as like his logo, just, you know, because so his logo was the crescent moon, and he was like, hey, let me add an avatar to this crescent moon, which ended up, originally it was a duck, but he had like a third iteration that was kind of the Wassie there. And so Maru found that kind of adaptation and was like, hey, I have a crypto Twitter account. Let me just make this thing my PFP. And so kind of he started off as like the OG Wassie and just memeing about like, you know, this is like some unique, distinct type of animal. And it really, really took off as like this just really funny meme where a bit grim and dark and dystopian, but that was kind of the market at the time, right? It was, we had nothing going on. We had to make our own content. There was no entertainment, so we had to become the entertainment. And so the Wassies kind of just really, really spread this like very, very natural crypto meme where it was like, hey, this is something fun, interesting. People, because like fundamentally a Wassie is an incredibly blank canvas. It can be like whatever you want it to be. And so lots of people started adapting Wassies to their own personas, their own accounts. And it just really, really grew out as this like huge kind of crypto community of just people who were bored and trying to find stuff to do. And kind of, yeah, that's like how Wassies grew in 2018, 2019 in terms of like just a really, really cool natural crypto meme. Yeah.
No, because go ahead. Yeah, no, because I've always been exposed, like even earlier on with Wassies, and I'm like, this is a pretty amazing meme, you know? And it's like, it's quite distinctive. So yeah, kudos to that.
Memes rule the world. Thank you, Belinda.
Awesome. Thank you so much, Lumdar and AJ, for the great talk on NFTFi. Really learned a lot and good to know the origins of Wazi. Great. Next, we will have our panel about crypto regulations and also the innovation scene in the region. So we will have Giorgio, and we will have Nasha, and we will have Rishabh on the stage. Okay, let's take a photo first. Yeah. Let's take a photo first. 3 of us. All professional. Who's got the Sorry.
Yeah, keep that up there.
I got a middle. Okay. Where?
It's in the middle of the voice.
Okay. Okay.
Sit down and you can sit on this. Can you sit on this in the middle?
Oh, yeah, sure.
That's perfect. Table.
Let's get seated. It was a very informative session. And we'll have one.
Yeah, I can put
Please take a big chair out there.
Yeah, of course. Of course.
Yeah.
There was one more.
Do you have another one? Oh, okay.
Yeah.
Does it work?
Hi, everyone. Let's give our panelists a round of applause. We have Giorgio from Klimadao and Nasha from Siba Bank, and then Rishabh from TDFi. Let's give them a round of applause. Okay, Giorgio, feel free to lead the show.
First thing first, thank you, Belinda, for giving me the opportunity of being here. So maybe we should start like giving like a super quick introduction about ourselves.
Sure.
Nasha, please.
Sure. Thank you very much. Pleasure to be here. And firstly, thank you to Sharding Capital. My background is traditional finance since around 2008, working with a number of large investment and private banks, the likes of Macquarie Bank, ABN AMRO, HSBC Wealth, Credit Suisse Private Bank, and then after that, some external asset managers. And I set up my own, worked for a Web3 game studio, which is very, very relevant to what we're doing here, and also helped source investments and capital for a Web3 VC. In terms of my crypto exposure on a personal level, been involved since Q3 2017. I made a lot, lost a lot, but it was good fun. And also participated in DeFi 2 Summer. And I think you can give us some background on that as the founder of Klimadao. And now I work for Seba Bank, which is a fully regulated Swiss crypto bank. And we're here to support the ecosystem. And thanks again to Belinda. And I'll pass it across to Rishabh.
Hi, everyone. I'm Rishabh from TDFi. TDFi is a Web3 incubator with a portfolio of over 50 projects, 3 unicorns. We have been in the space for more than 8 years now, investing with the right founders, the right team, supporting the startup ecosystem, helping them navigate the token space, helping them with the token engineering and the token markets management. Yeah, that's a little bit about us, and happy to be here. Thank you, Belinda, for inviting.
Okay, then there's me. I am Giorgio. I'm qualified into states as a lawyer, attorney at law. I worked for many years in a big four in Italy.
Then I moved to blockchain. I also wrote a book about legal blockchain. And then I moved to green finance as founder and chief of legal at KlimaDAO, which is a DeFi protocol, as you was said by Nasha.
One of the best ones.
Thank you so much. Okay, so I have some questions here that they were agreed before. So the first one is, many have been quite bullish on the MENA crypto landscape. Do you agree? Can you share the notable changes in the organization reflect that? Be it the amount of queries of number of registered comes around the organization, or maybe just name some of the supports and innovation of crypto Web3 that goes here. I'm also going to answer the question, but after. So happy to take your take.
Thanks. That's a fantastic question, firstly. I think what's important to emphasize is that you've got a very supportive regulatory regime at different layers. Firstly, the base layer, you have the free zones. You have DMCC, which has the DMCC crypto zone. They even have a GameFi space. For me, that's phenomenal, right? To see that support, especially on a Web3 sector level with GameFi. So DMCC is great. Then you look at DWTC. They're also very supportive. You have Huobi there, OKX, Binance, some of the world's leading sectors. So I think, again, you're seeing support at the infrastructure level there. And then I think for firms who want to engage in crypto mining, you've got the onshore licenses that can support that specific service. Because again, I would advise I can't advise, but I would say talk to someone who can officially advise. But you want to say, firstly, what is the activities and services my business is doing? Is the license allowing me to do that? And then making sure they match. Because if they don't, you're going to end up with problems when you set up banking infrastructure. And that's no good because you can't run your business if you don't have banking infrastructure. And I'm sure as a crypto lawyer, you can attest to that, right?
Absolutely, yes.
And then if you want to engage in the management of money, then you need to look at more intense regulation. And we have two zones for that, which is DIFC, regulated by the DFSA. We're here right now. And then you have Abu Dhabi Global Markets, supported by the FSRA. So those would be your next two areas at a different level if you want to take client funds, which is interesting if you're setting up like a Web3 hedge funds, VC, asset manager, all really interesting to look into. So for me, from an objective standpoint, the UAE is leading the way from a regulatory standpoint. Singapore is fantastic as well, but I think potentially it has quite heavy regulation. The US has its own characteristics, if I were to put it that way. And I think Europe has a lot of segmented regulation, the UK, Switzerland, etc. So that would be my take, but I'll pass it to Rishab.
Yeah, I do agree with most of the point that Nasha has said, but just would like to add a couple of here. If it's only about regulations, probably there are a lot of countries and a lot of geographies doing it. But the topic says regulations and innovation. And I don't think there is anyone close to UAE in the work they have done to bring the ecosystem together. Nasha mentioned about DIFC and ADGM in terms of the financial markets and their licenses. But the work DMCC has done in the space to bring the crypto center together and has been helping the companies in not only setting up, but bringing incubators, ecosystem partners together so that when a company gets established there, they're sort of essentially getting access to all of this network, which is important for innovation. You can't expect an entrepreneur to innovate and fight these petty battles, which can be easily solved by just some partners. So in that way, UAE has certainly done a great job. No doubts about that. And one more, there are many factors that, adds up to this. One is its geographical location. It's more accessible to all parts of the world. People feel comfortable in terms of safety. UAE has done a fantastic job. Kudos to the government for providing a safe environment. So everyone feels safe here. Whatever hour of the night or the day, everyone feels very safe in working and setting up their companies. In terms of ease of doing business, yes. I was talking to someone from DMCC today, and they said, one thing about UAE is that whatever work you have to do, they'll not stop you, but you'll have to get the license and regulations. You cannot operate without that, which is really good because, and the reason is right, you got to save and protect your investors and stakeholders if you want to innovate, if you want to flourish and thrive. So, I mean, with that, I would conclude that there is no one close to what UAE has done in terms of innovation and regulations both.
Okay, so basically you said everything. So I cannot actually add anything. No, just my take, coming from Europe, what I can see and what I saw that it was like basically the big thing that also told me, yes, okay, here business is perfect, is that considering what you said about the license system and the possibility of doing everything in the license, which for me, honestly, it's perfect because so when you're going with someone, he can do that, but he cannot do the other. So it's a protection also for the customer, in my opinion, or the business that you're doing. But the good thing that I really think that it's like game changing, at least out of my experience, is that you can talk to the regulator. Like you can set a meeting and you can say, I would like to do this, I would like to do that. And you can actually have like the human connection. Therefore, you can basically try to understand what you're doing, or maybe even like trying to see if there is like a possibility of like, I don't know, maybe adding a license or maybe understanding if your activity falls under the license, which is something that is amazing because if you're familiar with like doing that in Europe, you can do that, but it's going to take forever. Like, thinking of Switzerland, maybe like getting a non-action letter from FINMA is the minimum is 6 months. I mean, like we are in Web3 and we are in crypto. In 6 months, a project is dead. We do not have this time. So if you have the possibility of directly going to the office of a person that represents the free zone or just that have the power to help you out, or it can basically give you like his opinion of that's possible, that's not possible, I advise you to go in the other free zone or whatever, that's literally game changing because it saves you so much time and allows you basically like to do your business in the best way. So this is my take on that. I hope you agree all.
No, very much agree. Very much agree.
Okay, then we have another question here, which is, lots of people think it's easy to raise money in the Middle East. What's your take on that? So do you mind if I like give a quick introduction? So in my opinion, raising money is easy if you have the good product. It's not that here it's easier. Just there has been like some, I'm not saying false advertisement, but advertisement saying that like, a lot of people in the area would invest easily, but it's in my opinion, it's totally wrong. I mean, if you have a good product, you can get funded pretty much everywhere, even in Europe, which is very, very, very difficult. The thing is that here, as you for sure know, we started like, they're the sovereign funds. So, which is something that, correct me if I'm wrong, but started here in the 80s, right? So basically like, from the outside, the public has the perception that here it's easier to get funded, but in the end, it's just like a fund that is different. So because it's a sovereign fund. So in my opinion, like if you have a good product, you can get funded everywhere. But here, considering like the interactions with the fund that they have, it's a different kind of game, and it can be perceived as easier. But in my opinion, it's not, or it is as easy as doing a raise anyway. So.
Sure. I'd say that you make some very valid points. And for me, it's interesting because if you want to raise in a mature market, you're going to attract mature capital raisers. So what does that mean? Let's assume that I was raising in a traditional financial center like New York, Singapore, Hong Kong, Zurich, potentially. You're not really going to get in the room with many people without a warm introduction, right? Because they're kind of different. So a bit more of a gated feel on the capital raising side. Now, in the UAE, it's a fantastic environment. It attracts a big inflow of expats. And there is a lot of wealth here, but a lot of that wealth is top heavy. It's with the sovereigns, right? And then the wealth that's beneath that is with a lot of single family offices, UHNWs, HNWs. You're not getting in front of a single family office, UHNW or HNW, just by like calling their landline. It doesn't work like that. Even a LinkedIn approach, right? I would encourage you to try, sure, because maybe if you send 1,000, you get 10 replies, but it's not the most efficient way. Secondly, our industry has a lot of interesting people in it that are doing interesting projects. Now, because most of them are pre-revenue, the majority of VCs that I've spoken to, and Rashab can speak to that more than I can because it comes from one of the best, TDFi, right? Incubator VC, big player in the ecosystem. They're going to invest in the team, right? Pre-revenue, right? They're going to invest because you've done something, you're coming from amazing track record of education, but I would argue that's more of a bull run characteristic. In today's market, they'll say, who are you? What have you done? Why should I give you money? Right? So if you combine that.
And being sure that you're not going to run away.
Sorry?
And be sure that you're not going to run away with the
Yes.
money, right?
Yes, yes. Well, that's why it's good to use a good custodian. But anyway, that's a different discussion. So I think for me, you're adding a difficult layer in the UAE because there's too many people trying to raise money here for whatever it is, private equity, hedge funds, direct deals, real estate being the most famous. And then you're adding Web3 as an overlay of an interesting industry. So I would disagree with the hype that it's easy to raise money here. There's so much noise that it's not easy at all. You have to know someone like him who can get you in the door, right? And say, okay, we'll back you, and then we'll help open doors. That's what the power of a firm like TDFi is, right? And similar firms. So, but my only caveat is if your project is amazing, people will come to you eventually, right? But very difficult because VCs are seeing deal after deal after deal, right? Now, if you're post-revenue, and if you're a real project and you have a proper valuation model, and you're doing DCF or comparables, and you have proper valuation methodologies, then I think you're going to be able to attract some interest in this space. Because so many other decks are built on the classic trust me bro type mentality, which I don't think is going to fly. So that's how I see it, to be honest. I think it's easy if you're prepared and if you're connected. And if you're not, it's really, really difficult. You're better off trying to raise in London if you're not, as an example, potentially, if you're just an average project, because there's more Web3 competition here on the ground. That's what I think.
First of all, nothing of this was scripted. He was talking about us without any script, right? Sorry? Nothing of this was scripted.
No, not at all. No. It's just honest opinion. Not at all.
So I think I'll answer it in two ways. One, in my real honest opinion, fundraising is easy wherever the money is. Right now, all the money is in the Gulf. We know, just 2 days ago, I was reading that Saudi Aramco has produced $15 billion of annual profits. Like, we're not talking about revenues here, we're talking about profits, which is 3 times Tesla, Twitter, Meta combined. Now, I mean, one company producing that revenue, that profits, we have one of the most used natural resource here. We know there has been, a lot of family offices bringing that capital. And one thing which I really like about the entire UAE is they don't just put all their eggs in one basket. Now, when they see the innovation is happening and the technology adoption is happening, they're diversifying. They're putting money in other baskets as well, right? There are more companies, there are more fintech innovation happening. There is more AI innovation happening. You go to Sharjah, you go to Dubai, you go to Abu Dhabi, you would find, just in GITEX, the display of technology is immense. I mean, it's incomparable to anywhere else on any part of the world. And that's simply because a lot of these family offices and funds are coming forward to help it. Which one, in terms of raising funds, I think you're right on that part, that they, apart from looking at innovation and what they're doing, they also look at the ecosystem. How are these companies helping the ecosystem of UAE to grow, right? So, and I've seen this conversations happening with most of the family offices. Whenever I meet them, they're like, yeah, we are happy to invest, but what value do you bring to Dubai? Now, this is culture. They know that if this value that we are putting in the company comes back to the region, that's going to grow us 2x, 3x, 4x, and we'll be able to, innovate more, invest more. So in terms of that, I think, yes, UAE is definitely, it's not that difficult to raise money if you have the right product, if you have the right contribution to this region, and if you have the right connections, to be precise.
Totally agree. And I just want to add 2 points. If you look here, there's 2 big players, for example. You have Hub 71 in 80 Gem, which is dedicated $2 billion US to Web3. It's not a small amount of money. And you also have Venom Foundation, right? Which is, again, another, I believe it's $1 billion that they've dedicated to support Web3. So it's not only headlines, it's not only events and meetups, and there's a lot of those as well. It's actual hard money that you can see that's announced. And that's why if you, as Rashab said, if you have a good project, you want to support the region and the ecosystem, you can find that funding.
I just wanted to, as I'm a moderator, as I find out like half hour ago, I have a question. I wanted to know what's the difference, in your opinion, with raising in Switzerland and here. Well, in here we already talked enough, but like the difference in Switzerland. And I don't know, Rishab, which is your like experience, but maybe also, I don't know if you have like a different opinion on a different state.
It would be hard for me to comment on that, to be honest, because I've never engaged in that in Switzerland.
Okay.
So I'll pass it to Rashad for that one.
About the difference from Switzerland and here?
Well, yeah, I said Switzerland because of him, but maybe, I don't know, maybe, America, India. I don't know. Where do you come from?
In terms of India, I think the way the entire Indian ecosystem is growing for technology, there is no one, I'm extremely bullish on that, right? The funds are really active. They are deploying capital. They're bringing a lot of value. We have seen unicorns coming out of India. We are seeing innovations coming out of India. But to answer a question regarding Switzerland raising money, I haven't raised money from there, but I was in Europe, in Switzerland last 2 months ago for some meetings around WEF in Davos, and the TDFi Europe Roadshow, where we went across 12 cities, 8 days, advocating about tokens, talking about tokens as a publicly traded asset, which is a very less talked about topic. People just keep sticking to startups and fundraising. Let's grow up and let's mature to be a little big boy in the town. The kind of ecosystem I saw there is more fintech innovation happening in that part of the world, right? Which leads to, whereas in this part of the world, the UAE, I see more technology and business innovations. They're more inclined towards building businesses around finance, around fintech, and doesn't like to go outside it. That's the comfort zone, and that's because of the Swiss laws as well. They're very friendly with banks. There are a lot of amazing banks coming out of it now. Let's see how Credit Suisse turns out. But even without it, there are a lot of good banks coming out of it. So that's one of the difference. I don't know whether I was able to answer your question, but that's the difference I see between raising or the kind of companies coming out of it.
Because, for instance, my take, as you mentioned, the Davos meeting, World Economic Forum, Klimado was like mentioned in the report of World Economic Forum as one of the best solution for fighting climate change. But I have to say that even like when the WEF puts you in a report, we didn't get any traction from Switzerland. So like, I honestly don't know, but I saw like different regions as more proficuous for like a guy that is trying to raise rather than, for instance, Switzerland. That's why I wanted to have your opinion.
Right now, these regions are struggling with economy. From the last few years, they're struggling. The economy is trying to cope up, and whereas the UAE is growing fast like anything. So yeah.
Great. So next question, which is my favorite question. So is there any official party supporting stablecoin issuance? If no party yet, has government bodies shown tendencies? And what is your take? So I'm going to go last because I have a lot to say, or at least I have my own opinion.
Could you repeat the question, please?
It's about stablecoin issuance. What's your take? And if you know something about like governmental bodies that are showing tendencies in like issuing one.
Oh, I mean, last week itself, the Chinese CBDC has been implemented with WeChat Pay. That's taking CBDC to 1 billion users. Now, I don't even see a question of anyone even thinking about whether CBDC is a reality or not. Indian government has implemented e-rupee for across banks and some transactions above a limit. It's already happening. So, that I think this question was better discussed 2 years ago. Now it's happening. Let's talk about stable coins. That's an interesting question. I see a lot of companies thinking to build a stable coin. Now we saw Circle struggling. I won't say that it was really affected. It was just a couple of $100 million loss they were sitting at. If anything would have happened, but fortunately nothing happened and they recovered. However, stablecoin issuance is not a business for you if you don't have a large ecosystem to support it. If you are someone who knows, okay, either you go and make something like a MakerDAO, where the DAI is pegged to the stability of maker pools, which has been running for 6 years now, and has millions of dollars of value liquidity coming in from pension funds, from large risk averse funds, which itself talks a lot about how stable they are. Or you just go and build something which connects the existing stable coins to the existing infrastructure. I don't see issuing stable coins should be the first kind of business you should try for if you don't have the right big ecosystem to support you. So that's my take.
What about what Binance has been doing with their stable coin? What's your thoughts there?
Sorry?
With Binance and their stable coin, what's your thoughts there? I'd love to hear that.
I wouldn't, in terms of what's happening with Binance, I think as an organization, as the business they were, and with Paxos issuing those stable coins in US, yes. But in terms of volumes, USDC and USDT, TNC have a large market share, right? And because of the stability of the Binance as an organization and the kind of support they have, they're from a lot of big players which we know of, I am not seeing a really catastrophe effect, and I would like to reserve my comment till there about BUSD.
Fantastic, thanks. One thing I want to emphasize in my view is that if you want to, and you're absolutely right, there's a ton of new stablecoin projects, is that you either need to have significant funding and you should have some track record in treasury management, right? Because for me, I thought it was interesting that certain projects, and I don't need to go into which ones, but I think they were not using real risk management and real custody diversification, right? And if I take the most simple example, if you have an ultra high net worth person, right, let's say they're worth $500 million, they're never going to put all their money in one bank, in one domicile. And if they are, someone should be advising them not to do that. You need to have domicile diversification and bank diversification, right? Even though, as we all know, even if you have investments with a bank and it sits off the balance sheet, it's not commingled, you should still engage with various banks, right? It has an advantage. So I think any stablecoin project out there, first and foremost, should have proper bank and custody diversification.
I mean, if we go by the insurance, FDIC insurance, there will be need of 1 billion banks to diversify banks. I mean, to have a bank diversification. But for retail players, you're right. They should, for retailers, like for people who have less than $1 million or $2 million, they should diversify. But we still need to find a solution for managing the risk and auditing the risk management of the banks, the risk profile of the banks and their assets, so that these kind of situations won't happen.
Sure, you're absolutely right for cash, but for financial investments, they're held off the balance sheet, so they're not affected. So for example, if I'm a corporate and I have $1 billion with the bank, and or let's say, sorry, 100 million, if 999 million and then $750,000 is in money market instruments and 250K is in cash, and my cash is insured up to that amount, let's just say by the local regulator or the local insurer, then my money is safe because it's held off the balance sheet, right? But a lot of people still aren't engaging in proper treasury management. What do I mean by that? They got too much cash with one bank, which is where your point is correct. You shouldn't do that because then you're risking your money outside of the amount that's insured, right? Hence why you shouldn't hold cash, too much cash. Outside of your working capital, and you can even lock that into short-term money market instruments that are expiring, on a monthly basis, for example. But coming back to what I was saying, I think for me, you need to have that custody diversification, domicile diversification. I can pass this. Okay. And that's the first point. In terms of CBDCs, though, Rashad is correct. It's inevitable. It's only going to be having a snowball effect, in my opinion. Now, what will be interesting to see is if that will be the dominant currency or if stable coins will end up being a competitor over time. this I can't comment on, but it'll be interesting to see how it unfolds.
Okay, so I want to give my personal take because I had the privilege of working with the staff of the Senator Loomis and Gillibrand for the Loomis and Gillibrand bill. Which is a new law. It's a draft, actually. It will probably, we'll see his ways in the next months from, again, like Senator Loomis and Senator Gillibrand. And he has like a very, very extensive part regarding stable coins and asset-backed tokens. So in my opinion, you know, the United States of America leads the space. This is my personal take. I'm not saying anything, but if they are so interested in stablecoins and asset-backed tokens, coins, whatever, I think that this is the next big thing. So I have this is my personal like opinion. Full disclosure, we at CleanMedAO and me personally, I work with Circle, not at, but with. So for instance, one of the models that I like most, because in my work, reputation is everything, is USDC. So Circle, the stablecoin issuance. So in my opinion, for instance, if you ask me, a state like the UAE, the moment that they would like to roll out with their first stablecoin or whatever, they should like seek advice from who they think or they deem that they are the best. So aside from the financial risk and management, which we saw like this weekend actually, I think that it would be just much easier for a governmental body like to go to the best, which they think that is the best for, which is in my opinion, Circle, and say, hey, we want to make like I don't know, the Dirham stablecoin or whatever. Can you help us? Because at that point, you know, also from like a financial, like a business perspective, it makes it much easier and just much, much, much better. So of course, not like the model that it is now, but a model that is like remodeled on the needs of the region or the state. So that would be my opinion. And adding to that, I mean, we've quite seen like that there was a depegging, but I just want like to say like 5 seconds of this. So how do you say this in a nice way? So everything happened because on Friday, like the official Circle account like rolled out with a tweet, and then there was like a mass fear in the market. So you know, you've never seen any stablecoin issuer doing this kind of tweet. So I think that transparency has a high cost, like a proper cost and market cap and in value, but like this is how things should be done. So, you know, CBDC is totally different. It's not a totally different thing. It's a different thing, but stable coins, we should learn from the best, or who we think that we are the best. And yeah, so I think that like if a nation, like a small state or whatever would like to roll out with some like a private issuer. But this is my personal.
Maybe.
Do you want to add something? Okay.
Awesome panel.
Okay.
Okay. I actually I don't know if anyone has questions for this panel, because a lot of you stayed until this late because some of you are quite interested in the crypto regulation side. But I would love to go ahead with my question. So recently I've been meeting a lot of people from Hong Kong, from Singapore, and then we are based here in Dubai. So I would like to ask our panelists today to rate the 3, say, jurisdictions, how crypto or how powerful and influential they will become in 1 to 2 years. If you can rank the 3 places and just quick rationales, but the ranking first: Singapore, Dubai, Hong Kong. Yeah, so maybe go ahead with Rishabh.
UAE. I mean, that's
Yeah, UAE.
I would rather not answer this question. And in full disclosure, I have complete faith and belief in all the 3 jurisdictions, and there is no rating. But still, to respect the question that you have asked, I would say all the 3 countries are doing a pretty good job. but I feel more better to be regulated in UAE for the ecosystem.
Awesome, awesome. Thanks, Rishabh. Nasha.
Sure. In true Swiss fashion, I'm going to stay neutral. I'm going to provide 3 first positions, if you don't mind. There you go, mate. So I will go with the Falcon economy, right?
The Falcon.
Abu Dhabi, a big part of the UAE though, so also Dubai. So that will be my first choice. Second equal choice will be Switzerland. I think Crypto Valley shows it. It's very supportive, trying to drive a lot of Web3 innovation, a lot of it around fintech or DeFi, you could say, but fintech more. And I'm also a big fan of Singapore, to be honest, as well. I know some people think that the regulation is a bit harsh, but I think they're trying to do that to protect the end users. So I think these are 3 fantastic domiciles, to be honest. But as Rishabh said, anyone who's trying to support the industry, I'm a fan of because they're driving adoption.
Awesome, awesome. Good answer. Giorgio.
Super fast. I remember Singapore was one of the pioneer in regulation, because in 2017 they rolled out with a sandbox system and a framework that took like traction. So I would definitely put in my top 5 Singapore, but again, I cannot give like a ranking, because depending on what you need to do exactly, depending also where are you looking for funding, and depending how easy is the situation, that will I have to give you like a different opinion. Like you just want to issue tokens, then you should go there. In the Caribbean, for instance, do you want to issue something that is just like has a blockchain, private blockchain? UAE is perfect. There is so many different things, and depending on what you can do, the state that will change. That's my take.
Very diplomatic, Giorgio. All right, thank you so much. Everyone give a round of applause to our last panel today. Thank you so much. Let's take a picture. Yeah. Let's take a picture together. And then after that, we will have the rewarding ceremony from DMCC to our present the demo project today. Thank you. Awesome. Now let's welcome Bilal, the Director of Business Development from DMCC Crypto Center, to award our 3 winner project today: Fuji Finance, Phaver, and OrbofiAI. Let's give a round of applause to Bilal from DMCC Crypto Center. Thank you so much for supporting Shard Dubai. Thank you so much. And then we'll have Fuji Finance, first of all. Let's do Fuji Finance first, and then, yeah. Can you help please? Can we have the photographer here? Just can we have someone remind our lovely photographer who was talking to a beautiful lady over there? Thank you so much. All right. Networking session.
Yes.
You have that? Yeah, the first project. Nice. Woo. Wait, let me get the wait, I need the background. Okay.
There's a background. Okay,
there's a DMCC logo there.
Okay, so where should we stand?
Where should we stand?
Yeah, it should be in the center of it.
Yeah.
Right? Right. Jack, come, Jack.
Awesome. Let's give a round of applause to Fuji Finance. Good job. Thank you, Bilal. And then next we'll have OrbofiAI. OrbofiAI is the third because Phaver is not here. Okay, we have the OrbofiAI. So let's have OrbofiAI on the stage. 3, 2. Oh, sorry. Zahir, you're wanted on the stage. Awesome. Congrats, OrbofiAI, for the success. Thank you so much. And thank you, Bilal. Thank you, Zahir. All right, everyone. This is the conclusion of Shard Dubai in March 17th. Thank you so much for staying until now. Thank you so much. Halas. This is Halas now.
I have a call, unfortunately, but I hope to see you.